Looks like we have a question from Tiger Glory. Morning, Tiger, or Cassandra, I think you met your name was last week. What's my opinion about buying gold instead of saving as US dollars? Well, I think gold is a great hedge and a fear factor investment. And so I think that having a little bit of gold in your portfolio is a very smart thing. Now, when the global economy goes into recession or an extreme depression, which happened before in 2008 and back in the 1930s, what happens is people buy gold, right? So the price goes up quite a bit. And it's a good way to diversify your portfolio because there's a negative correlation between the price of gold and stocks. So I think it's a great investment. I wouldn't put more than 5% of your net worth in gold. And you don't have to buy gold bars itself. What you can do is you can actually buy an ETF, which has the ticker GLD for gold. And it mirrors the price of gold. And so I think that that's probably a great way to hedge your assets. I'd recommend actually never having more than 5% of your net worth in any one investment, aside from your house, of course. Great. And if that didn't answer the question, please let me know, Cassandra. Thank you. Okay, Aga, good morning. Pharmacy business, you'd like advice for this business. Please ask me a little bit more specific questions. I'd be more than happy to offer my humble thoughts on the pharmacy business. But if you had to ask me what my thoughts were on that, the most important thing, as always in real estate, is location, location, location. So, and I actually have relatives that own a couple of pharmacies up in Canada. One of them is called IDA, and it's a franchise. And what they do is they have a lot of high margin products right by the checkout counter for obvious reasons. When you're lining up, you end up making these impulse purchases. So yeah, if you have a specific question about that, please let me know, Aga, and thank you. Sumit, good morning. How do I learn something new? I'm in fear. So whatever your fear is in business and in life, I want you to run towards it because there's a good chance that it scares other people as well. And I'll give you a great example of one of my failures earlier in my life. So I used to be terrified of public speaking. I was really, really scared of it, to the extent that when I was in university and when I was in the training program at Goldman Sachs, I would ask more questions than anybody. And the reason I did that was because I didn't want to be cold called and be asked to speak on the spot or get up and present in front of everyone. That's was my biggest fear. And so I actually learned to embrace public speaking after a while. And I turned my biggest weakness into something that's not a weakness anymore. And I actually enjoy it. And that's why I'm talking to you right now. And that's why I give presentations. I love it. I love it. And what you can do is whatever you're fearful of, please just run towards it. If it's public speaking, then go to meetup.com, enter your city name, and then the words public speaking. And you can attend public speaking sessions, which are called Toastmaster in some regions of the world, for free. Great question. Thank you. And if that didn't help out with your fear, please let me know. But the bottom line is run towards your fear, embrace it, and turn your biggest weaknesses into strengths. Okay. And for me, another big weakness used to be accounting. I know that I teach accounting, and many of you are my accounting and finance students, and I'm very embarrassed to say this, but I actually got a D on accounting when I took it at McGill University. Back in 1991 is when I got a D, and I had to repeat the course. And the reason was because I was fearful of numbers, I was intimidated, and I was memorizing accounting instead of understanding it. And once you understand accounting or finance or anything in life or anything in business, then you remember it well. Okay, great. Okay, so thank you, Tiger. Tiger, whose name is Cassandra. It looks like your 10-year-old daughter named you Tiger there. It's pretty funny. Cool. Okay, so if you have questions again, please let me know. Looks like we have a question from a guy. I want to learn about the air ticketing business. So it's a very competitive business. at least in the United States. I know that Google entered the market a couple of years ago with a $700 million acquisition of a company that would compete with Priceline as well as Expedia. It seems that there's only a handful of companies that can really dominate that market because it's so relationship intensive. You have to have relationships with every major airline in order to buy tickets in bulk and sell them at a cheaper price. And if you have a follow-up on that, please let me know. Okay. Cassandra said you dropped the MBA program at UNF because of accounting. Yeah, I hear you. I hear you. It used to be really intimidating to me. Now I love it. I love accounting now. I'm a nerd, I know. Just because it's interesting trying to understand the relationship between the balance sheet, assets equaling debt or equity. It's fun. It's fun. And I learned to enjoy mathematics as well, which is why I now enjoy accounting. And it's interesting because my kids now, they ask me questions about math. And instead of having them memorize rules, I just have them understand it. And they actually enjoy it more when they understand it. Okay, so again, if you have questions, please type your questions here. I will answer every single question. If you have multiple questions, please type as many as you want right now or during this call, as I will answer every single one. Thanks. Okay. Okay, so I just got to follow up. I think the pharmacy business is very profitable, and I want to invest in it. So please advise me about becoming a partner and learning along with the business. Well, what I recommend doing is this, and I'm going to give you a generic answer that is applicable to every single sector. Okay, so what you do is you go to websites of other pharmacies or other large companies. Then you go to investor relations on that website, and you read everything that they provide investors with. You can also go to the government website for which that pharmacy stock is based on for stock market. In the United States, it's sec.gov. And what you can do is, and I'll show you. So on sec.gov, you can learn about any company you want by searching for the ticker. In this case, it's FB for Facebook. And then just search for 10K, which is the annual report. And that's a great way of doing research on any company. And they're out there for every company that's ever gone public. And this is for Goldman's IPO from 1999. I worked there. I didn't really get any shares. And what happens is every risk is listed on the business model in this document, as well as everything you can possibly think of the company, right? All the executives, what the company does, who their competitors are. They mention that too. And so if you're going to start a pharmacy business, make sure that you go to the investor relations website for the pharmacy sector or any sector in general, and just read about the company and their competition. And do channel checks too. Walk into stores and ask people that work there, what products tend to sell, which ones don't, that sort of thing. And the big chains have people that will definitely help you answer those questions. I used to do that with GameStop years ago, a video game retailer. I would walk into GameStops close to where I live, and I just ask basic questions like, what's the number one best-selling video game right now? Or what are people returning the most? Or what are they asking for the most in terms of the pipeline for video games? And it really helped me. And if you get a chance to meet with a company, a pharmacy in this case, I got for your example, ask them what the weaknesses are of their competitors. And they'll be really happy to help you out. And if people aren't very helpful in the store, just keep asking. You will find somebody that will help you out big time. And so that's what I did with GameStop. I would go into different GameStop stores and just kind of ask what's selling, what's not, that sort of thing. And it's okay to do that on a smaller scale, meaning just ask one or two stores for a publicly traded company. But if you get too much information, if somebody tells you that, oh, we're going to miss the quarter, we're going to miss our numbers, then obviously don't invest, because it's criminal in almost every single country to do that. And if you want me to talk a little bit more about insider information, please let me know. But the bottom line is, if you want to learn about any company or any sector for that matter, or even if you have a job interview with any company, go to sec.gov, enter in the ticker, FB and GS, the two examples I showed you, Facebook and Goldman Sachs, and search for the 10K, which is the annual report. So if anybody has any additional questions, or if you have a follow-up, please let me know. Thanks. Okay, let me scroll up here, see if I'm missing any questions. Okay, so as a follow-up, I'll talk a little bit more about commodities. Because Sandra, I think you mentioned that you wanted to buy gold. You can also buy other commodities, and the best way to do it is always through ETFs, which means exchange traded funds, which are really easy to buy. So silver is SLV. That's the silver ETF. Gold, as we know, is GLD. That's the ETF for gold. And I don't recommend buying any mutual funds ever. And the reason I say that is because the fees are really high with mutual funds, and they're a ripoff and a scam, in my humble opinion. Yes, there are some that are better than others, and some that outperform their index benchmarks. But most ETFs actually are not good investments. And what happens is, oh hi Gotham. What happens is when you invest in a mutual fund, you don't realize this, but a lot of the time they're charging you 5% per year, right? Including an annual fee and transaction fees. They trade a lot. And because what they do is mutual funds, the portfolio managers chase performance, especially at the end of the year, in order to get a bigger bonus for them. What happens is they buy and sell, buy and sell, buy and sell, and buy and sell, which is not the best way to invest. You got to think longer term. But more importantly, if you hold an investment for more than a year, most governments around the world will make you pay less taxes than if you held an investment for less than a year. Okay, and it's government's way of trying to encourage you to think longer term. And Warren Buffett always said, "The longer the view, the wiser the intention," and I certainly believe it. Okay. Okay, Gotham's got a question. Again, if you have questions, please type them in the message box there. Gotham is saying, why is the price of crude rising globally? Well, I'll talk about in general what happens with crude prices. So a couple things make oil go up. One of them is tension overseas in oil-rich countries. It could be Venezuela or Saudi Arabia or the Middle East, whatever. And so whenever there's geopolitical tensions in that area, people think that, oh my goodness, it's going to be harder for these big transportation ships to ship oil from the Middle East or Venezuela to the customers, whatever that might be. And that's why oil might rise in that case. Another reason why oil sometimes rises is if the economy is doing exceptionally well, really, really well. What happened was in 2007 and 2008, during the financial crisis, leading up to that crisis, oil was well over $100 a barrel. And people were talking about going to $150 or $160 a barrel. And what happened was after industrial production dropped during the Great Recession of 2008, so did the price of oil. It dropped a lot. Okay. So hopefully that answered your question. If it didn't, let me know. And in terms of ETFs for oil, there's lots of them. One of them I used to look at is USO, which is the United States Oil Index. And it's very liquid. You can buy it and sell it if you wanted to without having to wait very long, because it trades like water. They say it trades a lot. So anyway, those are my thoughts on crude oil in general. But what I love about commodities is that there's a scarcity factor, right? There's only a certain amount that's available, and there's some really, really rare ones too. Something called rare earth. Right, and just do a Google search on that, and those are tend to be very volatile ETF investments when it comes to commodities. Okay, great. So, okay, Cassandra has a follow up. Oh, I love this question, and please write as many questions as you want to right now, and I promise you I'll answer them. Okay, so Cassandra said, can you explain in detail in your, or do I explain in any of my courses how to read and understand an earnings report? I do. So two of my courses. One of them is called Introduction to Finance, Accounting, Modeling, and Valuation. And then that's a 4.5-hour course, I think. But if you want something much more in depth, way, way more in depth, what I recommend doing is buying my course, the Complete Financial Analyst Training Course. And that course is, I think it's about 20, maybe 21 hours long. And that will walk you through how to read financials from an earnings report. And so it looks like, Tiger, you mentioned, or Cassandra, you mentioned you're an engineer, not a finance person. I wouldn't worry about that, because in Silicon Valley, there's a very famous saying, which is that it's easier to teach an engineer finance than it is to teach a finance person engineering. Okay. And it's all mathematically based too. And so when you take a course on Udemy or anywhere else on accounting and finance, don't try to memorize it. Try to understand the relationships between the three financial reports: the income statement, the balance sheet, and the cash flow statement. And if you have questions on those specific financial comments or financial statements, please let me know. Again, type all your questions here. Okay, great. Thanks, Tiger or Cassandra. All right, Raymond. Oh, Raymond, how are you? Raymond, I think you sent me an email yesterday. I will respond. Sorry, I've been jammed. I will respond. Okay, great. So Raymond says, in your opinion, or the opinion of other credible financial pundits, how long does this bull market have yet to live? That's a great question. So what happened in a bull market, for those of you that are familiar with that concept, a bull market means when the stock market's going up a lot. A bear market means when the stock market's going down a lot. And if the stock market goes down just over 20%, then what happens is we are in a bear market. That's what the media calls it. And so don't let anybody ever tell you this time it's different. Business and the economy is always cyclical. Okay? That cosine and sine chart comes in handy now. What that means is, if things are going well now, I promise you eventually they won't go well after a while. And usually economic cycles last 10 years. Okay. And so the last great recession was 0809. And, that was like 8 to 10 years ago or so. And so my bet, and I never call markets or stock market target prices. It's impossible to do. But I like to think longer term, right? And I love to buy when everyone else is selling, when there's panic, right? There's so to speak, blood in the water. And I know that's a harsh term, but that's the best, or pardon me, blood in the streets. It's also a good Doors song called Peace Frog. But what happens is when everyone else is panicking a lot, that's the best time to buy, right? Buy when no one else is buying. Otherwise, what happens is, if everybody's chasing the same cryptocurrency or the same stock or the same commodity or the same real estate investments, then what happens is there's not that many incremental buyers. And so it's a foolish investment, in my humble opinion, to buy when everybody else is buying, for that matter. And so it's hard to call peaks and troughs in markets. It's almost impossible. And I remember back in, I think it was 06 or 07, I worked for a really smart man named Arthur Samberg. And he owned the largest hedge fund in the world called Pequot. And I remember pitching to him a couple of stocks that I wanted to short, housing stocks, like KBH, LEN, which is Lennar, et cetera. And he said, "What's your thesis?" And I said, "Well, these companies are expensive, and I think that we're going to be in a recession soon." And he stopped me and he said, "Son, I've learned the hard way over the years never to stand in the way of insanity. Markets peak and markets trough. You can never, ever time it. And so the best thing to do is just think long term, and don't try to time the market. It's almost impossible. Have a handful of companies that you want to buy on your radar screen, and if you get an alert from Google Alerts or Yahoo Finance alerts, and they're easy to set up, that stock is down over 10%, then it might be a good opportunity for you to start buying. Okay, so anyway, that's probably the best answer there. And what I'll do in a second is I'm going to talk about what happened in 2008. I was running my hedge fund, and very symbolic this week right now, because this was exactly 10 years ago today. We almost fell off a cliff, all of us. And I'll tell you about that when there are no more questions. For now, just please answering your question. Yeah, answer your questions here. Yeah. Okay, great. Oh, and Ray, yeah. A correction, yeah, it's different than a bear market. Bear market means when the market's down over 20%. A correction means when a market is down sharply, but it could be less than down 20%. Okay, so Gotham's got a question here. Every time I get confused, it is very difficult to understand the golden rule of accounting. Can you please explain with an example? If you can, please be a little bit more specific with this. But the best way to understand accounting is to understand the relationships between the three financial statements. And I'll talk about it. Don't worry, I won't bore you. I'll make it very quick. There's three financial statements that every company in the world has to file. Okay, it doesn't matter what country you're in. The first one is called the income statement, which tells you how much money you made minus how much your expenses were. Okay. Then there's the balance sheet, which tells you what you own and who owns your stuff. Then there's a third financial statement called the cash flow statement. And the cash flow statement exists because the income statement is kind of a lie. It's a lie because on the income statement, sometimes there'll be non-cash items, right? Like depreciation, right? Or deferred compensation. And so the cash flow statement talks to the income statement and the balance sheet and tells you what the real cash balance differentiation is between accounting periods. And so if you have an income statement and a balance sheet, you can calculate the cash flow statement from both of those. And a lot of people do it in Excel. I have it in my courses as well. So it automatically gets created for you, the cash flow statement, that is. And if you have any additional follow-up questions about accounting, Gotham, please let me know. And if you're just joining us, welcome to our fourth webcast. Please type your questions right now directly in the comment field here, and I'll answer all of them. Thank you. All right, Margaret, good morning. Okay. What advice can you give a tech startup that is in a rural area and lacks access to the startup community? That's interesting. Okay. Also, they are having trouble finding engineers. Is geography as an important idea? It used to matter much, much more. It's mattering a little bit less right now. So a lot of companies historically thought we have to locate ourselves in the San Francisco Bay Area because those are where all the great engineers are. And then what happened was the price for engineering talent went up a lot here, as well as the price of land here in the San Francisco Bay Area. And so people started kind of looking overseas. Like India has been a fantastic place to work or partner with, and Hyderabad and other great areas there. And a lot of companies I've invested in have all of their engineers there. The same thing can be said with other countries, like Croatia, as well as Romania. These are some countries I've used, and the Czech Republic, which I visit every now and then. These countries have great engineers as well, and cheaper labor than Silicon Valley. Now, it's not just an America thing, because if you go to Middle America, what happens is that the cost of labor is a lot lower as well. And so I think that what's more important than being located close to engineers is to be closer to your customers. Okay, be close to your customers. That's much more important than being close to other engineers. And you can outsource a lot of stuff too. I outsource almost everything. I outsource my accounting. I outsource my web design. I outsource graphics, everything. And I go to a website which I recommend going to, which is called Fiverr.com. That's Fiverr.com. And then trying to purchase services there. And there's a lot of other Fiverr competitors as well. So the bottom line is, no, you don't have to be here in the Bay Area or close to many other engineers. We can work remotely. We can work. Look at us now. I mean, we're meeting remotely, all of us. Okay, great. Okay, if you have questions, please type your questions here in the message field. And Raymond, hey Ray, Raymond's saying, oh, you're welcome, Margaret. Raymond's saying, love this old quote regarding the market from Patriarch of $400 billion family fortune. I never buy at the bottom, and I always sell too soon. Oh, it's from Rothschild. I love it. That's a great quote. That's a great quote. Another great quote when it comes to family operated businesses is, the first generation makes the money, the second generation spends the money, and the third generation has nothing. It's interesting. So anyway, a little bit off topic there. Oh, you're welcome, Margaret. Thank you. And if you have any additional questions, please let me know. If you have follow-up questions, please type them here. I promise you I'll answer every single question that you have. And so please type your questions here if you can. Thank you. And so right now, this is the 10-year anniversary of the 2008 crash. And I'm going to explain what happened in 2008, okay, because I lived it. It was so scary because a lot of people lost their houses. My neighbor on the left lost their house. My neighbor on the right lost their house where I lived in Burlingame, California at the time. Things were scary. Things were really, really scary. And what happened was every financial services company was connected and they insured each other's financial products. And then a big insurance company called AIG had huge financial problems, and people were worried that, oh my gosh, AIG, an insurance company, can't insure those financial services companies anymore. Another thing that happened also is too many people were buying real estate. Right? A lot of people are buying real estate and getting massive, massive loans with almost nothing down, as there really weren't that many background checks. And so what happened was things got overextended. Real estate prices rose too much. The price of oil rose too much as well in 2008, which led to a massive, massive recession or depression, I should say. In 2008, we were within 24 hours of bank machines not working. Now, somebody had a question about the price of oil. So I humbly believe that the price of oil running up was one of the major reasons why we had a massive recession in late 08 and early 09. And I'll explain why. When I joined my first hedge fund called Kingdon Capital in New York City, run by Mark Kingdon, great guy. What happened was every day during the morning meeting of this hedge fund, Mark would go around the table and ask all the analysts or portfolio managers covering every sector, what can we invest in your sector that is tied to the Beijing Olympics? Mind you, this is 2003, 5 years before. And of course, the machinery analyst said, well, Caterpillar and Komatsu, because China's building a lot of stuff. And then I was a software analyst, and Mark asked me, and I said Autodesk, because that's design software. And so what happened was any stock that was tied to growth in China went up materially, and then it went down sharply in 2008. I'll explain why. What happens is people love to buy stocks ahead of a big catalyst, meaning a big event. Why? Because people will get excited about that event later. More people will start buying that stock. For example, I have to quote Wayne Gretzky because, represent I'm Canadian. Wayne Gretzky used to say that he was successful not because he skated to where the puck is, but rather he skated to where the puck is going to be. And that's a great analogy for stocks and investments and commodities. You want to invest in companies and investments that people are going to like. And so what happened was China hosted the 2008 Beijing Olympics, which I think destroyed the global economy. And it wasn't malicious at all from the Chinese at all, please. But what happened was this: China wanted to show the world, this is our sort of capitalist society. They wanted to show the entire world, how awesome China is and how big it is and how great it is to partner with them. And what happened was China built so much stuff to the extent that when I met with a CFO of a company called United Technologies, ticker UTX, they own the Otis elevator brand. When I met with that CFO, he told me in the next year or in the next 5 years, more buildings are going to be built in China than every building ever built since the beginning of time. And he also said that every year China creates the equivalent electricity grid infrastructure of the United Kingdom. And so what happened was there was so much massive building going on in China. And then Three months before the Beijing Olympics, which was the summer 2008, what China did was China said no more. And China stopped all industrial production for a 300-mile radius around Beijing. And the reason they did this was to stop pollution, to clear it up for a couple months. And so that during the Olympics, when a lot of people visit, it didn't seem like there was much pollution. Now, at any one point in time, about 30% of all pollution above me right now in the state of California comes from mainland China, right? And it comes because of a lot of filthy coal mines, et cetera. So what happened was when China stopped that industrial production, then it caused demand for stuff that goes into making buildings to go down significantly. The price of copper dropped a lot, right? Which really hurt Australia. The price of oil dropped a lot, which really hurt Canada, meaning Alberta, where they have heavy oil. And it hurt Venezuela, it hurt Russia, it hurt a lot of countries that are oil rich. And so commodity prices started dropping a lot. And remember earlier I said that AIG, the big insurance company, their price was dropping a lot too because they couldn't, insure, the financial services companies. And the biggest point for me, which terrified me, was when my mom and dad spent half the year in Florida, the other half in Canada. But my mom called me in 2008 and said, Chris, should we take our money out of the Bank of America, B of A, ticker BAC? And I said, no, but oh my gosh, why are you asking? And so there was a run on the banks. A lot of people started taking all of their money out of the banks and keeping it at their house. And the sale of safes was white hot. So you couldn't buy safes anywhere, right? They were sold out. I know because we were trying to invest in safe companies in 2008. And so there was a crisis of confidence. And it got really, really extreme. And one thing that bothers me, and I lived it, I managed my hedge fund then. One thing that really bothers me is a lot of CEOs from these big banks, that some of them should be in jail or fined or not making any money. But what killed me was the governments bailed them out. And then 2 years later, they all got record bonuses, which is ridiculous. Okay. And so what happened was the government had to actually save the banks. Okay. Now I'm going to say something very controversial. Okay. So Hank Paulson, who was the CEO of Goldman Sachs when I worked there. Hank Paulson became the Treasury Secretary, which means that he worked for the U.S. government in 2008 and worked on big projects, right? Like issuing bonds or, buying bonds back, which manipulates the currency. And our biggest competitor when I worked at Goldman Sachs, when Hank Paulson was running the firm, was Lehman Brothers. There was a lot of competition between Lehman Brothers and Goldman. And they were much better than we were at fixed income, but we were better than them at equities. But it was contentious, right? And Dick Fuld, who was the CEO of Lehman Brothers, he and Paulson didn't get along. And so there was a lot of animosity between them. And what happened was in 2018, in the third week of September, or 2008, in the third week of September, 10 years ago, Hank Paulson called an emergency meeting with all of the CEOs from the biggest investment banks in the United States. JP Morgan, Jamie Dimon was there. Morgan Stanley, John Mack was there. Lehman Brothers, Dick Fuld was there, et cetera. And at that table, he was kind of mapping out, how are we going to get out of this? And he told Lehman Brothers, or Dick Fuld at the table, you should probably take this deal from the Koreans to rescue your company. And Dick Fuld was very arrogant. And what happened was Hank Paulson basically dismissed him from the room. And the next day, Lehman went belly up. Okay, and that was the second big bank to go belly up that year. The first one was Bear Stearns. And if you get a chance, please do a search on YouTube on Bear Stearns and Jim Cramer. Okay, Jim Cramer runs a big financial program on television. And the media was saying, oh, don't worry, buy Bear Stearns. Things are fine. It's like that Leslie Nielsen a Naked Gun movie, nothing to see here. Behind him are fireworks and explosions and stuff. And so what happened was after Lehman went bankrupt in 2008, a lot of a lot of people a lot of hedge funds used Lehman as their prime broker, meaning Lehman Brothers stored all of their stocks. And Lehman went belly up, and the government took ownership of all those stocks from Lehman temporarily. And then what the government did in late September on a Friday, 2008, was the government actually covered the shorts, and that caused the market to rise about 10%. So it covered all the shorts. And a lot of people said, oh my God, we're in a bull market now, or the reverse of a correction, Raymond. And so people started buying. And then a couple of days later, reality set in that it was fake. And then so everybody kept on selling. And there's a great movie that I recommend you watch. And I think you can get it over YouTube. Do a search on Too Big to Fail. And that was a movie about the crisis. And James Woods plays the CEO of Lehman Brothers in that movie, Too Big to Fail. And he does a great job of coming across as really, really arrogant. Okay, so hubris had a lot to do with the crisis as well. And it was criminal, but a lot of hedge funds in 2008, what they did was they actually hired people, they hired actors to line up at banks in New York City. Why? So that when the media drove by those banks, they would think, oh my goodness, this bank is going out of business. Kind of like when you want to get into a bar or a nightclub and the bouncer makes sure the lineup is long. So I hate that. But you know what I'm talking about. Make it look like that bar is more popular than it is. Right. So and those hedge funds, people went to jail, but not enough, in my humble opinion. Not enough. Okay. All right. So if you have any follow-up questions on the 2008 crisis, please let me know. It was a scary time. I remember I had sleepless nights then. In my hedge fund, we went short. And so we were okay. We did fine, whatever. And then the end of the year, I remember I got redemptions. I was like, why are people redeeming from my hedge fund? Some from my offshore fund. In my offshore fund, I had in the British Virgin Islands, BVI, which is cheaper for offshoring than the Cayman Islands. I got a big $5 million redemption from the BVI. And I couldn't understand it. And it was actually a big company called Barclays in Europe that invested in my firm. And the reason why they redeemed from my company was because in late 2008, there was a guy named Bernie Madoff. And over a period of 20 or 30 years, he had gotten billions and billions and billions of dollars in people's money. And he invested it. And he kept telling people that the value of his portfolio is going up, which was BS. He was lying. And so what happened was a lot of people in a lot of mutual funds, they lost their shirts because everybody was trying to get their money out of Bernard Madoff's fund, and they realized it was worth nothing. And so I got a big redemption there as well. So the bottom line in 2008 was it was just a combination. It was the perfect storm. Remember that movie with George Clooney, the tidal wave? It was a perfect storm. Commodity prices dropped a lot, okay, because of the Chinese Olympics and the global economic slowdown. Real estate prices dropped a lot because everybody could get a loan easily, and the government said, "Hey, wait a second, this is getting too hot." The stock market dropped a lot. It was absolutely terrifying. It was scary. It was scary. All right. If you have any follow-up questions on the 2008 crisis or any other questions at all, please let me know. Again, please type your questions here. If I've already answered your question, ask more. If you have follow-up questions on anything, just please let me know here. Great. Thanks. Okay. So I've got, thank you, Gotham. Appreciate that comment. Okay, Gil, what is your opinion about artificial intelligence stocks? I don't really have any opinion on them. I don't really know of any that are great long-term investments. There's I think it was called Funai or Fanuc in Japan, which was a robotics company. But I don't really have any great investments. I'm sure there will be great software investments in that area. And I want to tell you what the biggest employer is in Palo Alto here, which is close to where I live. The biggest employer is not Facebook. It's a company called Palantir. And I invested in the company years ago. I sold my stake. It's still a private company. Peter Thiel was the first investor, whatever, the notable investor. And what Palantir does, is artificial intelligence-based pattern recognition. Or you can go to their website. It's one of their products is called Gotham Batman. I love it. And what they do is with that massive software algorithm that was created by Palantir, they solve the world's biggest problems. The reason that the U.S. government was a massive, massive investor in the company, as well as the CIA's venture capital fund, which I'll talk about if you want to in more detail. What happened was Palantir had software and found out where Osama Bin Laden was hiding in Pakistan. And without Palantir's artificial intelligence-based software application, the United States would not have found Osama bin Laden, right? It's a very powerful company, right? Palantir. And not many people know about it because it still is a private company, but I think it's probably going to be one of the better AI investments when they do go public. And Palantir is also used by the biggest banks in the world to find out if there's any fraud going on or security loopholes, that sort of thing. And governments actually use Palantir to solve really complex problems like human transporting and that sort of thing. Okay, trafficking, I should say. And so Palantir is probably the best artificial intelligence company that I know of right now. So great question, though. Thank you. And if you have any other questions, please let me know. And if you want to take courses on Udemy on artificial intelligence, and people ask me all the time, are you going to make a course on this? I think there's somebody better than me on this one. And this is a guy named Kirill. And just do a search for Kirill on Udemy. And he has a lot of artificial intelligence and data science based courses. Really smart guy, good guy, sharp. Better courses than me in that area. And he's better than me, most of my courses. Okay. All right. So again, if you have questions, please type them here in the message box. And I promise I will answer your question. While I'm waiting for questions to come in, I have to do my weekly tradition, which is show you my cup, which says, I survived another meeting that could have been an email. See that there? I gave this to my wife for Christmas. She got a kick out of it. Okay, great. All right, we got another question here. All right. Okay, Raymond is saying, did you ever see Money Never Sleeps? Okay, so Money Never Sleeps, for those of you that are watching, is the movie Wall Street Part 2, which is a Michael Douglas film. He won Best Actor for Wall Street 1 back in '87. Did I ever see Money Sleeps, where they use some artistic license to replicate the meeting between the Fed and the investment banks? I don't know what that means. They had to get a license to do that. Ray, please let me know what you mean, because I'm really, really curious. But what happened was this, and I'll be the first one to tell you. One of the reasons, sorry, I'm just going to turn this off here. One of the reasons that, hold on a second. One of the reasons that we had a big crash in the market, I believe, is because the movie Wall Street. I should probably make a vlog on this one or write an article. Wall Street was the original movie, came out in 1987. I am dating myself. And Michael Douglas won Best Actor for his performance in Wall Street. And his name was Gordon Gekko. You should watch it. It's a good movie. And Gordon Gekko was a criminal. He transacted on insider information, and that's how he got really, really rich. And a lot of hedge funds do this as well. It's disgusting. But what happened was people kind of saw Michael Douglas as, oh my God, that guy's dope. Like he's a cool character in this movie. And look how much money he has. And so what happened was an entire generation of students and younger people that were watching that movie, myself included, I'll be honest, we kind of wanted to work on Wall Street because it was kind of a cool movie. And a lot of people saw Michael Douglas as the hero in that movie. I certainly didn't. And when Michael Douglas was approached, and is still now approached, more than 30 years after that movie, people say, thank you so much, Mr. Douglas. I work on Wall Street because of you. And Michael Douglas has been interviewed about this, and he said he feels disgusted. And so I think a lot of criminal activity and insider information comes from that movie, because of that movie, right? I know that's a little bit out there, but Hollywood has a really big impact on business. But usually Hollywood is 10 years before us. So what I mean by that is Hollywood, we call them, which is in Southern California, we call them we call them the dreamers. And up here in Northern California and San Francisco, we are the executors, meaning making that dream a reality. And so there was a great movie called Minority Report that came out back in I think it was 2002 with Tom Cruise. And in that movie, Tom Cruise used all this cool technology like swiping screens and that sort of thing, and opening drawers and moving stuff around. And that influenced Silicon Valley a lot. And 10 years later, you had an iPad that did that, and many other technology companies emerged because of that. So movies always have a big impact and a big influence on markets and on sectors. Apologize. Christine's away in Greece at a wedding this week. Didn't get much sleep last night, and I was helping out with the kids. I have a friend drive them to school in a couple of minutes. So, okay. All right. So Margaret's got a question here. And again, if you have questions, please type them here. What I lost in my 2008 portfolio, I made up by buying a house at the bottom of the market that has tripled in value. Good for you. It was painful, but somehow we remained whole. Good for you. And Margaret, I know for a fact that when you bought that house, you were questioning yourself. You're like, oh my God, what am I doing? This is crazy. Should I do this? I don't know if I should do it. Like, that was good. And when you buy a house, if it's important to be careful, but I want you to feel uncomfortable when you're buying it and take on maybe a little bit more debt than you're comfortable with, but not too much. Because I promise you, it's a great longer term investment. My grandfather, my late grandfather, God bless him, he used to say, Chrissy, buy land. They're not making it anymore. Right. So good for you. And I remember I tried to refinance my mortgage back in 2008 and 2009. And I met with bank managers. And the first thing they said to me is, well, what do you do? And I said, well, I run my own hedge fund. And they're like, sorry, can't help you. And I got it down my knees, and somebody at Wells Fargo finally caved in and allowed us to refinance our mortgage. I could have lost my house, maybe. So it was hard. It was hard because even though interest rates went down a lot because the government was trying to stimulate the economy, banks weren't lending because they were scared. They were scared. So the government gave these banks so much money in what's called a TARP program, Treasury Asset Repurchase Program. The government bought the debt of a lot of companies, and that kept the banks in business. And then the banks didn't loan that money out to us, which was total BS. And so Hank Paulson and Ben Bernanke at the time did a great job of pressuring the banks to actually lend money to us, the consumers. Right. And so it was a $700 billion bailout, the TARP thing was back in October of 2008. And I remember it was about 10 years ago where Warren Buffett, similar to you, Margaret, you bought at the bottom when it felt really uncomfortable, real estate. Warren Buffett bought a lot of Goldman Sachs in 2008, $5 billion to be exact. And he did exceptionally well. And by the way, before you invest in any stock, go to sec.gov and look at the S1 filing or the annual report. This is Goldman Sachs's IPO report there. And you can see all the risks and all that stuff. So anyway, hopefully that was helpful there, Margaret. But great job on doing that. Okay. Margaret mentions there are some great AI programming courses on Udemy. And Margaret, please share with the rest of us what those courses are, so that if anyone's interested, they can go check those out. Again, if you have questions, please type them up here in your YouTube browser. Again, I'm apologize profusely. I'm absolutely exhausted. Christine's out of town. I'm taking care of 3 boys. God bless single working people. I mean, I have a lot of friends that are single parents that are women. That it's just so hard, man. It's so hard. It's tough balancing all this stuff, and this is going to help me a bit. There's coffee in here. Okay, great. So again, if you have questions, please type them here. If you have follow-up questions, please type them as well. I promise you to get to every single question that you have. We got a follow-up here. It looks like from Raymond. Raymond says, artistic license is a way to depict a real event, adding or taking away facts and names of the real players. Oh, I see what you're saying. Okay, so that when they made the movie, it's probably a legal thing, so they didn't get sued for misrepresenting. Okay. Okay. Oh, great new question. I do. Thank you. And please, again, type your questions here, please, because I want to answer as many questions as possible. I want to humbly help you if I can with anything business related, career related, personal development related, filming. Where am I filming this? My filming room here, etc. Okay. So I've got a question saying, are you happy with Google Live, which is what we're doing right now? It's free, and so I think it's actually pretty good. The only issue is that if I want it to be actually broadcast in a much higher HD format, and if I want to put screen prints on, like up here in the corner or lower thirds, text there, then I have to actually broadcast it using my own software. So Google Live is actually pretty good, pretty good. Everything that Google does is decent except for Google Plus. But anyway, that's that. So if you have any questions, please type them up, and I promise to answer them. And I guess I'll just kind of wait here for a minute or two until people type in their questions. Thank you. While we're waiting for people to type questions, I'll talk about the stock market and the stock market bottom in that 10 years ago crisis, right? So what happened was everybody was selling their stocks like crazy, and then in March of early March of 2009, the market bottomed. And people said that it bottomed at the S&P 500 bottomed at around 66 or so. It's kind of a weird number. People were saying it's a generational low. And my grandfather at the time, God bless him, he called me up and he said, Chris, should I buy Ford or should I buy Citibank? I mean, Citibank's it's trading at less than a bank fee at $1. And so the smart investors bought on the cheap there. And just think longer term when you're investing. And Margaret made actually probably the best investment you'll ever make, or one of the best investments, Margaret, you'll ever make, which was buying in 2008 your house. Good for you. And I know it probably felt uncomfortable for you then, because it felt uncomfortable for me even thinking about real estate. But you always want to be a contrarian. Buy when others are fearful, and be fearful when everyone else is greedy. Okay, it's a kind of a version of Warren Buffett's quote. Okay, so Gil says, what are the ways we can contact you for our personal questions? Well, you can type up the questions here, and if you want, just you don't have to divulge everything, but I'm more than happy to answer those questions here on this webcast. Or Gil, if you want, you can wait until everyone else has left the webcast and it's just you and me, and I'll give you my word when no one else is on. But just ask the questions here if you can. Thank you. Or give me just a high-level topic, what you want me to cover, and I'll give you my humble thoughts on that. Thank you. Okay, so again, if you have any questions, please type them here. Looks like I got a question on how do you value stocks? Okay. Most people make the mistake of valuing stocks based on earnings estimates this year or next year's, meaning the price earnings estimate. And for example, if a company is trading at 20 times earnings, that means for every $1 they make in profits and net income, the people are paying $20 for that $1. Okay. And what happens is if a company is growing annually earnings at, let's say, 30%, then a good rule of thumb to use is to assume it should trade at 1 times that growth rate. And if it does, it's a buy. I'll give you an example. Let's say we have company X, and company X is ticker X, which is, I think it's US Steel actually. But if US Steel has earnings growing between this year and next year at 50%, then you should pay 50 times earnings. If a company is growing at 9% per year, then you should pay 9 times earnings for it. Okay, that's that's kind of a nice rule of thumb there, but that's not it in a nutshell. You also have to look at the book value of the company, which means price to book. And Warren Buffett, who's a value investor and not a growth investor, meaning he doesn't like investing in tech usually. I know he has a couple now. But he'll look at something called book value, right? Which is the price. Oops, sorry. Which is the price of the company on the stock market divided by all the assets, the stuff that company owns. Okay, and that's called price to book. And if that ratio is 1 or below 1, it's usually a great investment, unless that company has bankruptcy issues, whatever, that sort of thing. And when you create financial models, and I explain how to do it in a couple of my courses, Introduction to Finance, Accounting, Modeling, Evaluation, whatever. When you do that, I want you to think 5 years out. Okay, I want you to create a financial model where you model earnings 5 years from now. And I want you to fill out a one-page template so you can crystallize and document your thoughts. And what you can do, if you want, everyone on this webcast, is you can go to my website, harounventures.com/template, all lowercase template. And you can download a one-pager. And if you want, please download right now. Actually, everybody go to that website if you can, harounventures.com/template. And when you're there, there's 2 documents you can download. One of them is a blank template that you can fill out yourself on a particular stock. Okay, it's in PowerPoint format. The other one is a one-page write-up I wrote back in 2011 on a company that I absolutely loved called NetSuite. And at that time, and you can see my thesis on it, at that time, NetSuite was trading at over 100 times earnings this year and next year. And everyone said, Chris, you're crazy. Why are you buying? And I said, because, I modeled this company out 5 years or 10 years, whatever. And it's cheap at 3 times my 5 or 10 year earnings estimate, right? So you got to think longer term. Otherwise, what happens is you get fooled by randomness. Okay, you might make money when the market goes up a lot in a certain stock. You're like, oh my gosh, this is great. I'll buy and sell and be short-term focused like this. But you can't make money longer term day trading. I promise you that. I promise you that. And I know it's a controversial thing, but I don't know of any great investors on Wall Street or anywhere that only day trade. If they do well day trading, then a lot of the times it's because they have insider information, which is criminal activity. Now, when it comes to artificial intelligence and investing in stocks, there are big firms like Renaissance Technologies. Do a search on it, Renaissance Technologies. And a guy named Jim Simons. He runs that company, billionaire, really smart guy. And what he did was he created a server farm, meaning a big building with thousands of Linux servers, which is like Microsoft Windows, but cheaper, with thousands of Linux servers running in parallel together. And he created this algorithm, right? That massive, massive server farm. He created this algorithm that could pick stocks and make 40 to 50% per year, every year. And I mean, he's got a ton of employees, whatever. It's pretty interesting. But for those of you that are interested in artificial intelligence, please check out Renaissance. Please read up on Jim Simons. You can read it on Wikipedia if you want, and just find out why he's successful, why his firm is successful. Okay, and it's a big computer trading based company. Okay, great. So, all right. So another question I've got, and if you have any follow-ups, please let me know. But one more thing I'll say about valuation is, if a company doesn't have earnings, how do you value it? Okay, how do you value it? Well, let's say a tech company just went public today, and they're not profitable. And by the way, when I used to work at Goldman, and when I worked in venture capital and in the hedge fund industry, the companies we invested in that were going public, we did not want them to be profitable. Why? Because we wanted them to raise money and use that money to hire more salespeople and grow their business, usually overseas. Okay. And so what happens is a lot of people have to value companies based on revenue. And so what you do is this. Let's say you just invested, or you want to invest in a cloud software company. You then look at, but it's not profitable. You look at other cloud software companies like Salesforce.com and others, and find out how many times revenue they're trading at, right? So Salesforce used to trade at 9 times revenue. And you can value companies that are similar to Salesforce using that methodology, okay? But it's always wise to have 3 different ways to value companies. And I already talked about price earnings, okay, which is my favorite because it's easy. And then we also talked about price to revenue. Now I'm going to talk about the third one, which is discounted cash flow, which I do not like. Sorry. And so discounted cash flow is when you model 3 financial statements: the income statement, the balance sheet, and then automatically from these 2 statements, income statement, balance sheet, the cash flow statement is created for you. Okay. And people will model out cash flow for 10 years. Okay. And then they will discount that 10 years of cash flow to today. Okay. Using the cost of capital or the interest rate out there. And here's why I don't like that methodology, because what they do is between years 11 and infinity, they take the cash flow from year 11 divided by the interest rate minus growth. Okay. And the denominator will never be below 0, I promise you. Okay. And 95% of the value of that company is from that terminal value, meaning years 11 to infinity, discounted to today. And so it's just too hard. There's just too many independent variables. And also, when you calculate the weighted average cost of capital for DCF, there's just too many inputs. And, if I told you X plus 1 equals 3, what is X? Okay, obviously it's 2. If I told you X plus Y plus W plus Q plus C equals 4, what's X? Of course, you don't know. So the bottom line is, with discounted cash flow analysis, there's just too many independent variables. Okay. Now, when you value companies, I want you to take the average of 2 or 3 methodologies. So if you did DCF and came up with a target price, I want you to use price to earnings as well, based on your 5-year estimate for earnings, and price to revenue as well, especially for companies that don't have earnings yet. And take a blended average of all 3. Okay. Because one of these 3 target prices is going to be way, 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 way off, and the other 2 will normalize that target price. So anyway, hope that answers the question. Okay, if you have any follow-up questions, please let me know here. Okay. Sudar, thank you. And I'll answer anything here, please. Hi, I watched one of your videos saying that you are not rich and you will never be a rich despite being a former employee of Goldman Sachs. And I'm not sure if you have a question there, but God, that's a great question. I mean, I've done okay enough to support a family. I've had some good years. I've had some bad years, right? But I do fine. Whatever. We're okay. We're okay. But just because someone works at Goldman doesn't mean that they made a fortune. My Canadian side of me is kind of humble and whatever. But I've done okay. I've done okay. But I will talk about friends of mine, though, that have done much better than me. Okay. I worked in the hedge fund industry and I did well there. I did fine, whatever. But I had friends that made, they made like, $40 or $50 million a year for their bonus, right? Which is crazy. And the reason they made that much money was because they were trading on insider information. And too many hedge funds still do this today. And what happens is, the reason that people get greedy and they trade on insider information is they want to support their family in many cases, right? I'm not justifying it at all. But I had friends that worked at an awful hedge fund called Galleon, which was in Midtown, New York City. And I had a buddy there who told me he was under so much pressure to deliver. And you have to make money every month. And every month has 20 days in it, trading days. It's impossible, right? So, but I had friends that made a lot of money, but they're actually in jail. And I've gone down to jail multiple times to visit my friends, right? I've never done anything wrong. But I visited them because nobody else would. And I have a soft spot in my heart always for people that are, persecuted or whatever, even if they did something wrong, which they did. And I can talk about that prison if you want more details on it, but it's not like maximum security. People call it Club Fed, the play on the word Club Med. It sucks because you're not close to home. You're away from your kids for years, but it's not maximum security. But I've done okay. But I know a lot of people that have done well because they broke the law, and I could have broken the law many times. I mean, I have had access to information, and I never transacted on it. I even went to my compliance director at the various firms I worked at over the years and told them, I heard something, so we should put this stock on the restricted list, meaning nobody in the company can transact in that stock, because I heard something. And if you hear something as well, something proprietary, like for example, let's say that the Apple event yesterday. Let's say that a day or two before that, you had heard that they were going to release, a newer iPhone, right? Just a bigger screen and that sort of thing. And if nobody else knew that, and you transacted on that because you knew somebody at Apple that told you, for example, and the government finds out, then you go to jail. You go to jail. And the way that these people get caught is because of the artificial intelligence-based algorithms. Margaret, you'll love this. So the SEC, or the United States Government Securities and Exchange Commission, okay, SEC, they use software to find people that are trading based on insider information. Okay, one data point doesn't make a trend, but a couple does. And usually people that commit one insider trading criminal offense and are not caught, they keep doing it over and over again. It's kind of like if you're dating somebody, this is out there, but if they cheat on you, they're probably going to do it again. It is what it is. Humans are kind of like that. So anyway, that kind of it explains that. And if you have follow up on that, please let me know. All right. Okay, Margaret saying it won't let you post to the Udemy courses. Just search for AI and Python. And if you want, Margaret, you can enter in the name of the instructor on Udemy here. And then, if you want to buy AI courses, go ahead. Again, I recommend this guy named Kirill. Smart guy, nice guy. I met him recently. Okay. Okay, great. So Fabricio's got a question. Hey, man, what is your take on day trading? Okay, so I respect other people's opinions when it comes to investing. I'm actually a long-term investor. I've done it all. Okay, I've worked in the hedge fund industry, which is short-term base, which I hated. I hated because if you had a bad month, people take their money out. It's ridiculous. And then I went into venture capital, where we're longer-term focused. And so being longer-term focused has taught me a lot about investing. Okay, and so I don't think that day trading is a profitable way to invest longer term. Now, whenever I look at a stock, I look at three things. And you can go to that website, harounventures.com/template, and download the sample template in PowerPoint format. I look at three things. First, I look at fundamentals of the company. Who's the management team? That's more important than anything else, because execution is more important than product knowledge. Then after fundamentals, I look at the valuation of the company, and I come up with my target price, which is usually 5 to 10 years out based on earnings. The last thing I look at is something called technical analysis. Okay, and I did a vlog on technical analysis. When I write up today's webcast, like give me 7 or 8 hours, please, after it finishes. But look in the description field, and I'll give you a link to technical analysis. It's a 20-minute discussion that teaches you everything you need to know. And so technical analysis is a way to time the entry and exit of stocks. Okay, I don't agree with it, but it's okay to use it, kind of. Okay, but as long as you're happy with the fundamentals first and then the valuation second. So I'll give you a couple of examples of technical analysis. If a stock is going up over time and it's going like this, if it doesn't violate this moving average, the 50-day moving average, then it probably will keep going up, because if I were to take this and throw it, an object in motion stays in motion for a while. Okay, and once that company violates that trend line, meaning it goes 5 or 10% through it, then a lot of the big technical trading companies like Renaissance Technologies will start selling that company because support has been broken. Okay, there's also something called the Relative Strength Index, or the RSI, and that basically measures how a stock is performing relative to the market. And so if the RSI is under 20, that means that stock is oversold and it's a buy indication, if you like the fundamentals and valuation. If an RSI is over 80, then that company is a sell. And the reason it is it's just basically mean reversion, right? Too many people sold, too many people bought. And if you do that, take a look, go to Yahoo Finance, finance.yahoo.com. And when you're at finance.yahoo.com, type up any stock, okay? And then adds the indicator, the relative strength index. And look for that pattern. Sometimes it looks oversold, and when the RSI is below 20, that's when the stock bottomed. And when the RSI is above 80, that's when the stock peaked. Okay, so check that out if you want to. Again, I have to stress, if you're going to do that, the short-term focus stuff, make sure you're happy with the fundamentals and valuation of the company first. Okay, very important. One more thing I want to say is this. When a company reports earnings, usually it's every 3 months, by the way. So companies report earnings every quarter, 4 times a year. When a company reports earnings at 4 p.m. New York time or 1 p.m. my time here, they issue a press release. And analysts that have created their own models will look at how the company did in the quarter, earnings meaning, okay? And if that company missed earnings by 20%, the stock usually gaps down 20%. If the company beat earnings by, say, 32%, the stock usually gaps up about 32%. That's Canadian about, okay? About is wrong. You got to say about. Okay, so that's another way to look at it. And there's a gap in the chart. Let me explain this actually, for those of you that are shorter term focused. Let's say a Google just reported earnings and Google beat earnings by 30%, okay? The stock jumps up 30% the next day. There's a gap, okay? There's a gap between where it was yesterday and where it opened the next day. Usually, that gap has to be filled before the stock can resume higher. Again, the stock gapped up, right, the next morning because earnings were amazing. And there's a gap, meaning you don't see a line between yesterday and today's stock price. Longer term, usually, before stock can go higher, it has to close that gap. Right. So anyway, hopefully that makes sense on technicals. And if you have more questions on technicals, please let me know. And I respect everyone else's opinions on finance and ways to invest. It's just my personal preference is I don't do technicals first. I don't really like technicals much. You can use technicals to decide when to start a position or take a little bit of profit. Okay. Okay, great. All right, let me see here. All right, I got a question on what is your outlook on energy and the oil sector on a short and long-term basis? Well, it's short-term is hard for me, right? I don't like making short-term calls because what drives a stock or a commodity or any investment in the short term is something bigger, meaning a big macro event, right? If a new trade war was announced between several countries, whatever, I'm not going to go there. What would happen is all stocks would go down. Okay, you can't forecast that. You can't forecast that event or something tragic, terrorist-driven occurs. Then what happens is your stock that you're looking at investing in goes down a lot. Okay, you can't time the market. And so with oil, I can't time it, but longer term, heck yeah, I love it. It's a great investment longer term. Okay, all commodities are great investments longer term because there's a dearth of them. There's not that many of them in the ground, right? And you can even look at companies like potash for fertilizer in Europe. The equivalent of fertilizer companies called Syngenta, that sort of thing. They trade based on commodities as well. And anyway, so I think longer term commodities are fantastic investments, but don't have too much of your net worth in commodities. And if you're going to invest in commodities, make sure that no single investment is more than 5% of your liquid net worth, meaning your net worth not including your house. Okay, so just please be really careful with day trading because what happens is a lot of people tend to trade based on speculation, right? So anyway, it's and a lot of people love to use options as well, and I can talk about options if you want as well. And let me tell you something that's kind of uncomfortable. After 9/11, when I worked at Goldman Sachs, it was awful. I saw the whole thing. I worked on the 50th floor or 49th floor of the most southern building in Manhattan, and we were close to the Twin Towers. I can go through what happened that morning. I saw everything. Sorry, bad memories. But when we came back to work a week or two later, when the government opened roads and let us go back to work, something really scary happened. And that was, I'm getting chills just thinking about it. We all use Bloomberg software, okay, which is basically finance.yahoo.com. And you can research this right now if you want to. But what happens is when people are betting on a stock going down a lot, they buy options. They buy put options, okay? And if the stock goes down, that put makes a fortune. When people are positive on a stock, they'll buy calls, okay? Which means they think the stock goes up a lot, they make a fortune. Now, puts are when you're negative on a company, you're betting against it, okay? And what happened was this. When we went back to work a week or two after 9/11, which is scary, if you looked at the put volume, meaning the number of people that traded the puts on American Airlines, Delta, ticker DAL, Continental, ticker CAL, if you look at the put volume on that, it was a record high in the day or two before 9/11. Terrifying. That means that people financed terrorism and knew about it ahead of time. Okay, and part of what's called the Patriot Act, which was a U.S. government act to basically protect the economy, which went a little bit too far, I think, in terms of NSA spying on us. What happened was we had to, when I worked at Goldman and everybody on Wall Street, there's this whole, if you see something, say something, which I agree with. But we had some trades that were traced to Eastern Europe, and other firms did as well for those puts. And so we had to be very, very careful. And there's AML laws were created, which is anti-money laundering. Anyway, so that's kind of a long-winded answer to that. Now, there's other ways to invest in energy in the oil sector. Okay, you don't have to just invest in the commodity itself using an ETF, meaning the OIH for the Oil Services Index or the USO for the United States Oil Index. Another way you can invest in commodities and energy is by buying companies that use a lot of energy, like Caterpillar, right? Caterpillar makes great tractors in Peoria, Illinois, and I visited their plant, their management team. Great company. Or Komatsu, another great company in Japan. And by the way, when I flew in to meet with the management of Peoria, or management of Caterpillar in Peoria, Illinois, when we came out from the airport, there's a massive Komatsu sign, right? So big competition. That's a good thing, though, because competition is good for the consumer and the investor. Okay, so anyway, longer term, I love energy. I love commodities. I can't time market bottoms or market peaks. Just think longer term. And there's an analyst that worked for me, great guy, smart guy. And whenever he pitched me a stock, he would say, Chris, I don't know the path, but I know the destination. Focus on the destination right here, okay? Focus on that. Write up your one-page reports, which again, you can get the template from harounventures.com/template, all lowercase. Write up your reports because it'll make you think longer term, and it'll make you not panic when stocks go down. Okay, great. So, okay, is there any way to know? Again, if you have questions, please type them here. Thank you. Even if you've asked a question already, ask more, please. Thanks. All right. So, is there any way to know which sector is leading in a stock market? Okay. Yes. Here's what you do. Go to finance.yahoo.com. And by the way, finance.yahoo.com has everything pretty much that Bloomberg has. I used to spend thousands of dollars every month on Bloomberg software for my employees, right? And then I got rid of it because I realized finance.yahoo.com does everything for free. And I created a portfolio dashboard, an Excel-based dashboard that will link to data from finance.yahoo.com in one of my courses. I don't want to pitch courses, sorry. What you can do is, what ETFs are, exchange traded funds. There are ETFs for every sector as well, okay? There's the OIH, which is an oil index, right? There's also what we call in Wall Street the Qs, QQQQ, which represents the technology stocks on the NASDAQ, okay? And then there's also a real estate index, There's a cyclicals index. There's every type of index you can think of. Okay. And what you can do is you can look to see which index is doing best versus the others. And a lot of times the reason that we make money in stocks is because we invested in the right sector. Okay. So if you made a lot of money in a stock last year, year before, or 10 or 20 years ago, the sector probably did really well. And that's probably one of the reasons that you made a lot of money on that stock. Okay. Doesn't always apply, right? But there's a high correlation between stocks in the same sector. Okay. So hopefully that answered your question. You can get ETFs and look at sector specific ETFs on finance.yahoo.com. Okay. Don't pay for any finance software. Okay. Use finance.yahoo.com. It works for international stocks as well. Okay. Type in the ticker and it'll show up. So it's got local companies like Infosys, right, is on one of our exchanges here, and it's also in India. Same thing with Satyam, Wipro, etc. Okay, and Cognizant before SAP bought them. Okay, great. Okay, I got a question here. What is a hedge fund? Please explain in a simple way. Okay, no, I love that question. Cassandra, I appreciate that. So here's what I'm going to do. When I write up today's call, I'm going to provide you with a link to my vlog and one video, which is how hedge funds work. Or just go to my YouTube page and just do a search on hedge funds. You'll find it. And I created a day in the life of a hedge fund analyst. And it was almost perfectly replicating what I went through each day. Okay, so watch that if you can. I put cartoons in, it's entertaining, whatever. It's actually called What is a Hedge Fund and Shorting Stock. Okay, but again, I'll put a link there after the call is done. I'm so sorry. One second. Didn't get much sleep last night. Sorry, Christine's away. So a hedge fund is basically, think of a backyard, okay? So if you look in your backyard, and I'm looking at mine right now, beautiful day, you protect your backyard with bushes, hedges around it, okay? Protection, right? And that's the analogy. That's why it's called a hedge fund, okay? It has nothing to do with Sonic the Hedgehog. You protect your backyard. And basically, you understand what a mutual fund is. A mutual fund is when you invest in products or funds that are made up of stocks, okay? It means you're betting that those stocks can go up. You can do the opposite as well, which means you can bet on stocks going down, like I mentioned with puts. Okay, you can also short stocks and bet that they're going down. Okay, and hedge funds do that. They bet that stocks are going to go down and stocks are going to go up. And I worked years ago at a hedge fund that used a lot of leverage. I mean, they borrowed a lot of money to invest. It was scary, but they made a fortune. And basically, if you have an equal number of longs, meaning stocks you own, and an equal number of stocks that you're betting against, meaning shorts, what happens is if you make money on both sides, you do well. If you lose money on both sides, you're done. But if the market moves a lot, one of these two will make money, okay? And when you do that, it's always catalyst based. You know, and the best way to invest in a short, meaning a company you're betting against, is this, okay? Simple question. In 5 years, will this stock be more, will this company be more relevant or less relevant than it is today? Let me say it again. In 5 years, will this company be more relevant or less relevant than it is today? Okay. And usually technology companies, when they start to become a little bit less relevant, they're done. They're done. Never invest in a tech company solely based on earnings. Okay, so let's say a couple of years ago or whatever, you would have said, in 5 years, are more people going to search the internet with Yahoo or Google? Obviously Google. And then you could say with cell phones, sorry, Canada, but I'm Canadian, here I go, this is awful. But in 5 years, are more people going to use Blackberries? You know, those RIM, research and motion devices? No. And so what happens is hedge funds kind of, bet against that sort of thing, right? So, but think longer term if you can. And hedge fund, remember, is because you have hedges in your backyard. And if you have an equal number of longs and shorts, right, then you're kind of protected. And people will lever up, right? There are some firms that for every $1 they have in assets, they have $10 invested. a lot of leverage. Okay, deadly, deadly, deadly. Okay, so a hedge fund basically can make money off stocks going down, as well as stocks going up. So hedge funds like a mutual fund, but it can bet against stocks too. Hopefully that answered your question, Cassandra. If it didn't, please let me know. I can even explain the anatomy of a short, how it works, if you want me to. Okay. Again, if you have questions, please enter your questions here. Okay. Okay, so Margaret's got a question. When you value or evaluate companies for an investment, do you ever assign a value to their intellectual property portfolio? That's a great question. Okay. IP means intellectual property. What if they are crappy at execution, but they have great technology and intellectual property? Okay, that's a fair point. So what you're referring to is BTE, which is barriers to entry. Okay. And you could search in the annual report for any company, for the 10K, whatever it is, for patents and patent protection. And if you create your company, okay, and I'm working on right now making a course on how to make a business plan. If you have something that's really secretive that you don't want anybody to find out, you can file a patent. And the United States Patent Office is so backloaded, right? To the extent that if you say patent pending, meaning your patent will be coming in a year, hopefully, that's the same thing almost as saying you have a patent. And I'm sure you've seen that before, patent pending. And the only way that you can really value a patent is if you make a financial model for how much money that patent can make forever, okay? And so there are these patent trolls. I think it was a company called NXP, right, which bought and owned a lot of the patents for BlackBerry's, mobile phone. And what they do is they try to come after you that way and sue you. It's disgusting. And Qualcomm is kind of a patent company as well, because they own this incredible portfolio of patents, copyrights, trademarks, etc., on mobile phone technology. So the bottom line is the way to value a patent is to just think about how much money that one patent will make in the long run. And that might be in terms of licensing as well. Kind of like how McDonald's licenses franchises to people. You can own a McDonald's yourself and pay a franchising fee or a license fee. Think of it that way, okay? If Qualcomm were to shut down and only have one patent, which is on how to make mobile phones work faster, then they would charge all the big mobile phone companies around the world, Verizon, Deutsche Telekom, et cetera, Docomo in Japan. They would charge all these companies a fee, okay? So Margaret, just figure out what you think the fee is going to be longer term, or the license value on that. And if you have more specific questions on that, I'm always more than happy to help out. Thanks. And then you said, what if they are crappy at execution, but they have great technology and IP? Okay, so some companies are worth more dead than alive. And private equity investors, what they'll do is they will buy a lot of shares in the company secretly, and then they have to file with the SEC.gov. And when they file, like Carl Icahn does that, a filing will hit the tape saying, oh, Carl Icahn now owns 25% of a company. And the stock usually goes up a lot because people know he's going to try and turn it around. Okay. And there's a good movie on this, which is actually a great movie nobody talks about, doesn't get any credit, is Opium. OPM stands for Other People's Money. And it's a movie with Danny DeVito in it. That's the guy from It's Always Sunny in Philadelphia, I think. But it explains how private equity works. And sometimes a company is worth more dead than alive. Okay, and I'll give you an example. Or broken up is worth more. I was an investor in eBay years ago. And for those of you who take my courses, you've seen my one-page write-up on eBay and why I loved that at the time. eBay, the crown jewel of eBay was always PayPal. Okay. In fact, if they just renamed the entire company PayPal, the stock would have gone up. I know it's crazy. But people were confused about eBay because you're either a value investor, meaning you like to buy cheap stuff, or you're a growth investor. You like to buy expensive stuff that's growing fast. And so eBay was made up of two different components. Core eBay, the sleepy auction business, which isn't growing much, but it's a value investment. And PayPal, which was a high growth payments company. And so Investors that were growth oriented didn't buy because of this component, the eBay component. And investors that were value focused didn't buy this part, which is PayPal. Okay. And so there's no buyers. And what happened was Carl Icahn came in, and others too, joined the board and made the company break itself up. Okay. They made it break itself up. And sometimes a company is worth more dead than alive. Right. So anyway, that kind of explains what private equity is. And a lot of people think it's not fair that private equity firms can do this. But I disagree. Although I do have a compassion, a soft spot always for people that go through hardships like losing their jobs. I've been fired before. I think that private equity firms actually do a good service, which is making sure that every company is properly valued, right? So what happens is there's this guy named Keynes, who was some economist years ago. And he said there was this invisible hand out there that made markets efficient, okay? And that's what private equity does. It kind of makes the market efficient. It's Darwinism or survival of the fittest, that sort of thing. And hedge funds serve a purpose too, right? They make sure that stocks that are overvalued don't become overvalued anymore. Okay. And if you have a follow-up on that, please let me know. And by the way, there's somebody cutting the grass next door. If it's tough to hear me and you can hear the lawnmower, let me know and I'll close the door. Okay. Okay, hold on a second. Okay, so Margaret is saying the instructor to check out is lazy data scientist, lazy programmer. So search on lazy programmer on Udemy if you want to. Okay, hold on a second. All right, if you have questions, please ask them here. Again, I'm really, really sorry. I'm just exhausted today. Okay. Okay, any thoughts on Kevin O'Leary from Shark Tank, another fellow Canadian? I don't have a strong opinion on him, but there's a Canadian version of Shark Tank, and the founder of a company called like Lava Life or whatever. He is on that show. Really smart guy. I've been on boards with him before. I can't remember his name because I'm tired, and the older I get, the better I was. But I don't know of him. But by the way, when you guys watch Shark Tank, and I know a bunch of people that have gone on that show, okay, to pitch business models. What happens is this: you see them presenting for 5 or 10 minutes. That's it. But behind the scenes, they actually were interviewed for 2 hours by those panelists. And then in the post-production, right before the show goes live on TV, the editors, what they do is they only put in stuff that's extreme, that sounds sales-worthy, right? Like somebody making a dumb comment, that sort of thing, right? So it's not realistic as you think. But I want you to watch that show and listen to the questions they ask, because they do ask great questions. Okay. So, and whenever I meet with a management team, I have a list of questions I always ask, and they actually ask a bunch of those too. I mean, those are seasoned investors, right? And my father used to always say, only take investment from people, or only take advice from people that are successful. So I'm sure Kevin O'Leary is successful, but listen to his questions. Okay. Never buy a stock somebody tells you to buy. Do your own research first, but you can learn how to ask great questions by watching Kevin O'Leary or Mark Cuban, who sold his company broadcast.com for a couple $1 billion in the late 90s to Yahoo. Okay. Okay. All right, let's see here. And timing has a lot to do with success in business as well. You know, when Yahoo bought broadcast.com in 1999 for a couple $1 billion, they overpaid, but broadcast.com could have been YouTube, which Google bought in 2006. Okay. And Yahoo also bought a company called GeoCities in the late 90s, I think in 98. That could have been Facebook, but they were too early. So timing has a lot to do with success in business. Always, 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 right? Make sure that you're not too early or too late in a given sector. I can drill down that if you want as well. Okay, so another question here. Thanks for being honest about all the 9/11 gambling. My pleasure. My pleasure. Yeah, it's a very, very, very sad time. So if you want, I could talk about what it was like working at Goldman Sachs that day on 9/11. You're the customer, all of you. So just type in, yes, talk about that or not. Okay. but I have a lot to share if you care. Okay, Chris, can you speak on the private investment involvement with Toys R Us and other companies that are filing for bankruptcy? Okay, so I don't have any strong opinions on Toys R Us or other companies that are going to or have filed for bankruptcy, but let me explain what bankruptcy is. Okay, so in 1979, the US government set up 300 bankruptcy courts around the country. And the bankruptcy courts had one goal, which was to help a company turn around. Okay. And there's something in the bankruptcy laws, there's over 20 chapters, something like that. Chapter 11 is the one that you and I have all heard of. Chapter 11 of the Bankruptcy Code basically means the government will appoint a judge to put a force field around you for 4 months. Nobody can touch you. No one can sue you. Take your assets. Take your stuff. And in those 4 months, what happens is the companies will negotiate with the banks to turn around that company. Okay. And the investors will look at a way to maximize shareholder value like Carl Icahn does. Okay. And the amazing thing is that 70%, pardon me, 70% of all companies that file for bankruptcy end up turning the company around. It works. It works. And as long as there's no fraud involved. If there is fraud involved, then lights out, it's done. Arthur Andersen, Enron, et cetera. Okay, so that's what the bankruptcy courts do in general. And with Toys R Us, I don't know, but if you're analyzing that, then take a look at the value of the property they own, right? So if they own property, meaning if they're not just renting stores for toys, if they own property, then what I would do is I would go through the filings, sec.gov or whatever, and I would take a look at the value of all their real estate minus the debt they have, and that is the value per share. Okay, something like that. Of course, it's a little bit more complicated than that, but that's what I would say, generally speaking. Siddharth, love from India. Thank you. I love that. Okay, Alan's got a question here. And again, if you have a question, please type them here. I will keep going until all the questions have been asked. Okay. Hello, Chris. Do you think the economic crisis will come soon? I don't know. I never know. And it's hard to time markets, right? It's really, really hard. I don't know. And so I just think longer term. I know that business is cyclical. Remember the sine and cosine things? Business is cyclical. And if stocks are going up too much, I don't buy. If they're going down a lot, I usually buy. Okay. So, but I think longer term, I never try to time the market. But I promise you, I guarantee, and this is going to sound idiotic, we will be in a recession one day because the economy is cyclical. But don't think that way, please. Diversify your portfolio, own some real estate, own some commodities, own stocks, et cetera. If you want, take my, I always feel so bad mentioning courses because I don't want to hype them up, but I have a course called the Complete Personal Finance Course. In the last section of that course, I provided a template in Excel to help you create a diversified portfolio. Never have too much of your investments in one stock or sector. Okay. So it's harder for me to make that long-term call. Okay, great question. Again, if you have follow-ups, please let me know. Okay, thanks, Cassandra. Oh my God, Cassandra, I didn't know that. You're born in Romania, but you're Canadian, and now you're living in Florida. That's awesome. It's awesome. Well, a lot of Canadians in Florida, right? Just given the snowbirds, that means Canadians go to Florida during the winter. Okay, so next question here is, how do you know if the stock market is overvalued or undervalued? Okay, that's a great question. So historically speaking, the S&P 500, for example, trades at close to 15 times earnings. If it's above 15 times earnings, it's overvalued, and vice versa. That's it. And the rule of thumb is this. If the S&P or any index is growing at, say, 15% per year earnings, then all those stocks on average should trade at 15 times earnings. Okay. If a company, and if the entire S&P, if the S&P is valued at 25 times earnings, it should be because all the companies in that index are growing at 25%. So that's just a quick way to know about valuation. And usually I like to invest in companies that trade at a peg below 1, PEG. PEG stands for the price earnings divided by the growth rate. And so if a company is trading at 1 times its growth rate, say it's trading at 10 times earnings and the stock is growing 10%, that's good value, right? Of course, you have to look at fundamentals and other stuff, right? But if a company is trading at 25 times earnings and it's only growing earnings at 5%, that's probably a short, okay? And vice versa. All right. All right. What platform is the safest for trading securities? I don't really have one preference, but what I recommend is if you're new to this, whatever country you're based in, whatever bank you have your money in, call the bank and ask them if they have an affiliated trading firm. Okay. Of course, do all your research first. Okay. And the banks will probably recommend their own or other ones that are reputable. Right. And so in the United States, there's Charles Schwab. Think like Chuck. It's a great firm to invest with. I like them. But just take a look at what's big in your country. And if you're taking my personal finance course, go to the settings tab, enter in your country name, and I have 5 banks to recommend for you. And basically, we look at every country in the world, and they're all there. Anyway, okay. Next up, I've got Brandon. Can you give your thoughts on higher power, meaning God, and success at both personal and business success? Okay. So my personal opinion is, yeah, I'm religious. I know my family and I, my kids, what we'll do is every night we'll say prayers, and then we'll play a game on the iPad. But no, I am, and I believe that. And Gandhi had a great quote on this, and I'm going to butcher it, but he basically said, if you worry too much, then it's disrespectful to God, right? Because God already knows what's going to happen. Sometimes when I'm really stressed out in my life and down and out, which happens, and I'm worried about something, I tell myself, Chris, don't worry, because God already knows what's going to happen. Okay. And it puts me at ease. And earlier in this call, somebody had asked a question about your fear in business. My fear used to be public speaking. I was terrified, as you know. And what helped me get out of this rut was I went to jail to visit people. But I went to jail through the church, right? And it wasn't really a religious thing. But I would go on Sundays to help out usually these poor kids that were in their 20s that didn't have a father figure, right? There are a lot of deadbeat fathers out there. It's really sad, right? And in East Palo Alto, which is not too far from here, the high school graduation rate is only 40%. It's scary. That's the thing about America, is there are extremes, right? You can be in a great neighborhood, walk a block away, and be in a terrible neighborhood. Okay, so I would go to jail on Sundays. Okay, and I have my own police pass, and I can bring it next week to the call if you want to see it. And they did background checks on me. I would go in and we would just help out the inmates and just kind of talk to them, right? Counsel them, that sort of thing. Because you know what? And I'll say this on the record live here. A lot of those kids are in jail because of things that they did that I did as well, but I didn't get caught. Okay. Like little things, like drugs. Yeah. I've tried it. I have inhaled. I don't do it anymore. Only because it makes me lazy. But those kids were there. And there's this one kid I was talking, this is so sad. But he was in jail there, because he got caught on federal property, selling marijuana, and he's there for life. Crazy, way too long. It's not fair. And so you kind of talk to them and, counsel them through it. But when it comes to presenting, I thought to myself, I've got to beat this fear. And the best way to beat it is to present in front of really intimidating people. And so one Sunday, I was there at the jail, and usually it's the priest that conducts mass there, whatever. And the priest wasn't there. And so the warden said, Chris, Haroun. Actually, it's Haroun. But he told me that the priest didn't show up. You have to conduct mass, right? And I was so scared, because what happens is in religious services, many religious services, after a reading is done from religious books, the priest gives a speech about that, and they interpret what that meant. And I had to get up there, and I remember we had pamphlets, and I gave all the pamphlets out to all the inmates, and there's about 30 of them in this room, and the door was closed, no security. I was like, dude, what if I get offed here? Which is crazy, right? It was intimidating. And so I read through all the stuff, whatever anyone can read in front of a crowd, whatever. And at first, what happened was all these inmates with their arms crossed, they were intimidating as hell, man. They had like one of them had a tattoo that said "F you" right here, right? And they said that word too. But they were intimidated, and they had their arms crossed, kind of like I am right now. And when I got up there and I read from the gospel, and the passage was basically something to do with confidence and hope and believing in yourself, right? That was what the biblical or whatever lecture was about. And I got up there, and usually priests, they spend all week preparing for that speech. I didn't prepare. I didn't know what to do, and I was so scared. I was up there. And by the way, whenever you're scared and you're presenting, don't worry because you don't look scared, okay? You might feel nervous. People don't realize that, okay? But I got up there in front of everybody, and they were like, looking at me like that, and it was intimidating. And I basically told myself, I've got to beat my fear right now of public speaking. I got to beat it, Chris. Let's do this, right? And I kind of said a little prayer, and I got up there, and I said this, right? Because remember, it was the gospel reading was about confidence and hope. I said this. I said to all the inmates, "Do you believe in God?" And most of them went, "Yeah." Then I said, "Does God believe in you?" And they went, "Yeah." And then I said, "Well, if you don't believe in yourself, then you might have to question your faith." And that was an aha moment for me because a lot of the criminals or people that caught for doing stuff that I did, their arms went from this to, and so I got through to them, right? And it was that point there where I conquered my fear of public speaking. And at the end of this month, I'm going to Brazil to give a keynote in front of 5,000 people. That was me showing off. No, I'm just kidding. And I'm going to Calgary actually in November to do the same thing there. Same number of people. I love it now, and I turn my biggest weakness into my biggest strength, right? And so that's my belief on a higher power, on God, and just give if you can. And for those of you that want a nice Mother Teresa quote, please go to my Twitter feed and you'll see I purchased a brick in a building, and you'll see a nice quote there from Mother Teresa, who's awesome. I'm going to vlog about Mother Teresa one day. I love that woman. She was amazing. And let me talk about classes of people. Okay. Givers and takers. Okay. There's a great book. And by the way, I say the word K a little bit too much and the word right, R-I-G-H-T. And I have been criticized for it in my courses. Okay. So I'm going to try not to say it. Okay. But I am cognizant of my many weaknesses. Okay. So, people are either givers or takers. Okay. And Harvard Business School had a great book, Harvard Business Review book called Give and Take. And the poorest 1% of people in the world are beautiful souls like Mother Teresa, and they're givers. The middle 98% are takers, right? Most people are takers. But the richest 1% of people in the world, not that money is a measure of happiness or success, in my humble opinion, but the richest 1% are givers. They give with their heart. And everything that I've done in my life where I've been successful is because I've helped people. And I never did it because I wanted something in return. I just did it because I wanted to help. And last week's webcast, the first thing I said when somebody asked me a question was, I feel depressed every day if I don't help somebody, right? And so when I've helped people in the past, it's come back to help me big time. It was accidental. I didn't know. I might have coached a kid, helped that person get into Harvard Business School, and I've helped a lot of people get into HBS, two-thirds of which is BS. And I got rejected by HBS. But it years later, it comes back to help me. Right? I can't explain it. But if you give, you will get. I promise you, right? It's in the long run, it'll come back and help you. And some people call it karma. Some people call it other things. But if you give with your heart, right, which is what I'm trying to do right now, hopefully successfully. I'm so tired. I'm sorry. But if you give, not only does it feel good, you'll make the world a better place, and you'll get in the long run somehow. So hopefully that answered your question, Brandon. Brandon has a about God and personal and business success. Well, I never compromise my integrity. Okay. I've never lied in business ever, ever, ever. Right. And I remember I was working at a hedge fund once called Kingdon. It was in 2004 in August. And what happened was I left work one day early to go for a job interview. And the traders all looked at me and they said, Haroun, where are you going? And I said, oh, I got a job interview. And they all laughed. Right. And then I got a job offer from a hedge fund called Citadel, which relocated me out from New York to here, the West Coast. And then I told them, I said, see, when I was leaving, I said, I told the truth. Right. So, but I've always been ethical and never compromised my integrity, because what happens is the first time you compromise your integrity, you'll probably do it again. You know, it's like people say, once a cheater, always a cheater, in business and in life. And I never trust anybody in business that cheats on their wife or husband and whatever. Okay. So anyway, that's, I get up every day, respecting myself for my ethical outlook and all that stuff. And insider trading, people that get caught doing insider trading, and I made a 15-minute vlog on insider trading. You can go to my YouTube vlog and check it out. But anybody that's guilty of insider trading got caught, but they probably did it a million times before and never got caught. It's like somebody gets that's caught cheating on their spouse. They've probably done it many other times before, but never got caught. That sort of thing. So integrity comes first. And you'll find that many of you on this call today, this webcast, you'll end up working at a lot of companies in your life. And the only thing that you take with you from one job to the next is your reputation. That's it. Right. And it is so sad, because a lot of people that are really successful in life, all people remember is that one time that they got caught cheating or did whatever. So anyway, that's how I view it. That's how I view that. Okay. So if you have questions, please let me know. Again, sorry about my voice. Christine's away in Greece at a wedding. I'm taking care of 3 boys that didn't get sleep last night. Okay. So Cassandra wants me to talk more about 9/11. Okay. Okay. Yeah. So here's what happened that day. It was around 8 a.m. On September 11th, 2001. And I was sitting on the 49th floor, on the trading floor, the international trading floor, equities trading floor at Goldman Sachs. And we had heard, like on the news media and whatnot, market was about to open at 9 or 9:30 or whatever. We had heard that. We turned around, we're like, oh my God, look at that. And it looked like this. Okay, so these are the Twin Towers, right? The World Trade Center. Okay. You see the word natural mountain spring? The word natural, it looked like an airplane had gone into the World Trade Center. And the World Trade Center is so massive, we thought it was a tiny airplane, a really, really small one, right? Sorry for saying the word right again. And we actually went back to work. I did a quick prayer for those a couple of people that might have died in that accident, if at all. And then what happened was my mom called and said, are you okay? And I was like, Mom, please. Yeah, I'm fine. And then what happened was we all looked outside. And I remember it came in like this and crashed. And it was like, what the hell? It's another one? And at that point, we're like, what the heck's happening? And our compliance director on the floor, I'll never forget, she was running and screaming, saying, nobody panic, don't panic, right? It's like Chicken Little, whatever. And so we all walked down the stairs, 49 flights. And I remember looking out the window, though, before I walked down the flights, and I remember pieces of paper going like this, hitting our window and stuff. I vividly remember seeing a Citigroup a letterhead with kind of burned in the corner. We walked down the stairs, and I remember all women took off their shoes because they had high heel shoes, and we were being evacuated. And it was a slow march, and no one was talking, but you could hear sobbing. And then we realized something bigger had happened, like a terrorist event. And so we went downstairs, And when there's something like this going on, your brain kicks in and you just think about survival mode. And we all had to go into for counseling later. I'll talk about that in a minute. So I got downstairs and people that I was managing, right? I said, come with me. They're like, what do we do? Like people were walking around aimlessly. And I took them right beside our office. One New York Plaza was where I worked on the 49th floor. I took them right beside that into Battery Park, which is a park there in the lower. If you're looking at Manhattan, it looks like this, and Battery Park's right here. The Twin Towers are here. I work there. Okay, Central Park's up here, but Battery Park's down here. I took my team there, and the reason I took my team to Battery Park was because I didn't know what was going to happen. I thought the buildings were like, isn't it logical that like buildings, if they break, they fall down that way? That's what I thought. So I thought the buildings were going to fall down towards us. And when they fell, millions of people would rush in, this way into the river, and then we'd die. And so what I did was, because of that, we hid behind a wire fence because I thought people rush will be okay there. And we couldn't see anything. And there was smoke everywhere because the wind was blowing south that day. And you could smell the asbestos. I'm getting kind of teary-eyed just thinking about it. And that smell, that awful smell, lasted for months there. But I took off my shirt, my undershirt, and I tore it into pieces. And I poured water on the pieces and gave it to my team. And they all wrapped the thing around their head. And I remember there was a vendor, and he was giving out water, and somebody said, here's $1. And he said, F you, just take it. Right. And so we were hiding behind that wire fence, and somebody had a radio, and the radio said that the Pentagon had been hit. We're like, oh my goodness, this is crazy. And then rumors started flying. People said the Sears Tower got hit in Chicago, right? As well as San Francisco just got leveled. It was scary. It was really, really scary. And we didn't know it was over because the smoke was blowing overhead for ages. And every time we heard airplanes going overhead, which was the US Air Force, really loud, every time we heard that, people would scream in Battery Park because they thought that was more airplanes coming to bomb us or whatever. And then I'll never forget this, but there's a little opening in the sky that emerged, and all of us were looking up, and we saw a bunch of US Air Force jets, and people started cheering. It was weird. And then I thought to myself, oh my God, like survival mode. I thought, oh my God, my mom and dad live close to Pearson Airport, which is the airport in Toronto. And airplanes were being rerouted from America to land in Canada. And what happened was I found somebody that had a BlackBerry. BlackBerry is the only technology that worked then, right? It's weird. Phones didn't work, but BlackBerries did. I found a stranger that had a BlackBerry. And I sent a message to my mom. And I said, Mom, don't go near the airport. It's the most dangerous place in the world right now, okay, in Toronto, which I really believe in, right? Of course, it wasn't. Things were okay. And then I remember walking home, really stressed out, obviously. And I'm really opening up here, but I bummed a cigarette. I don't smoke, but I remember for the stress, whatever, bad idea. And then I walked to get my wife. My wife worked in the Donald Trump's building at the time, right on the southeast corner of Central Park. I went to go get her, and she wasn't there. And I saw thousands of people standing there silent, looking up at CBS News, watching it live. And I remember the graphic, Attack on America, the graphic. And then I went home, and I remember walking by Central Park, and there were a lot of policemen in front of synagogues, and I didn't know what was going on. I had no idea. And then I went home, and I couldn't go back. They wouldn't let us go back to work for a while. But that night, this is crazy, but I at that time when I was at Goldman, I did international equities, right? Japanese equities. And that night, the Japanese market opened. And a lot of my clients, they contacted me. They said, are you okay? Yeah, great. Okay, good. I want you to sell these stocks. And so I had to use my Hotmail account and instant messenger. Remember that name? And I had to set up a trading floor at my house, right? My little apartment, I should say, and send it back and forth to our traders in Tokyo and just liquidate everything, whatever. And then we went back to work a week or two later, and we went out and we bought a lot of food, Christine and I, and a lot of water because we didn't know what was going to happen, right? Rationing, whatever. Thank God things worked out okay. I mean, didn't get worse. But I remember we went back to work. It was scary. I remember there's a great analyst named Abby Cohen, and Abby Joseph Cohen. She was the head of research. And that morning, she basically said, "Don't worry, we all went back to work. Don't worry, because this city is much safer today than it was a couple of weeks ago," which is true. I mean, New York is a very, very safe city now, right? I mean, there's police everywhere. A lot of them are undercover, whatever. And so we went back to work, and some analysts from CSFB, Credit Suisse, I think, were telling people to sell stocks. You know, so he or she downgraded stocks. That person got fired. I remember that, and it was unpatriotic to be negative. It was weird then. It was really weird. And then we had to go through counseling. And what happens is when something happens, and I know people have gone through or in war-torn countries. Some of you on this call, I'm sure, have gone through it, and it's way worse than what I went through that day. But they made us go through counseling, which means you just talk about the problem. It's kind of like Alcoholics Anonymous in a center, in a circle. You sit and talk. And 6 months after a really bad event, what happens is you get hit hard with something, depression. And I remember it was 6 months after 9/11. And I was in Toronto visiting one of my clients called McLean Budden. And then I kind of broke down crying. And it was weird. Like I was like, what happened? And it just kind of, I went to see a doctor who tried to prescribe antidepressant medicine. I took the pill for a day too. I stopped because it gave me this weird humming feeling, and I flushed them all down the toilet. And I won't do that again. But that's it. We went back to work. And compliance was very, very tough going forward. Of course, they monitored every transaction, which is a good thing. And we had a lot of bomb scares. We go back to work and there were bomb scares. And all right, I'm going to talk about something else that's very controversial. So I already talked to you about how the put option value on American Airlines, Delta, and Continental went up a lot, okay, before 9/11, which means that some bastard was financing that war using betting against airlines, okay? But there were kind of losing my train of thought. I'm so sorry. There were a lot of bomb scares, but here's what I'm going to say, and you can verify this if you want to. And I'm not a conspiracy guy, whatever, but a week and a half after 9/11, Google search this if you want. We were sitting there and we looked out the window, another explosion. Massive smoke. I think it was in Brooklyn. I can't remember. An airplane had crashed and 250 people died in that airplane crash. And I think it was going down to the Caribbean. Nobody talked about it. Nobody talked about it. And what I think happened was I think the government called all the major media stations and said, don't talk about this because it'll force everybody to panic. And then when the airline was asked about it, they kind of quietly said, oh, and we had an engine fell out. Really? So anyway, I think that was another terrorist attack on America. And you can do a search on that. Just search on airplane crash, after 9/11 in September, whatever. Nobody talked about it. Nobody talked about it, but it happened. So, and as much as people criticize the American government and the Bush administration and the Obama administration, the fact that there hasn't been another terrorist attack since then, knock on wood, is a testament to the fact that they're doing a good job protecting us. But it can be extreme too, like with NSA stuff spying on us. And I love European governments because the EU protects our collective privacy, right? They really protect us. So anyway, lost my train of thought, but that's what happened on 9/11. And I remember Nobody got bonuses that year, or it was very small, but nothing to matter. Who cares? Anyway, if you have any follow-up questions about that, please let me know. Hold on. Okay, I got a question about, and if that didn't answer all your questions about 9/11 and what I went through in my team, and I know some people never came back to work, ever. They never came back. And one of my clients died. I was doing Japanese equity. God bless her. Her name is Naoka Kushitani-san. And you can Google it or look at the list of people that died. And she was one of my clients for Japanese equities. God bless her. It was crazy. And I remember that Cantor Fitzgerald, the CEO of Cantor Fitzgerald, he was on television that day or the next day, and he broke down and cried because he felt guilty that he didn't. Cantor Fitzgerald's a finance company that was located near the top of the Twin Towers. Everyone died. The CEO felt guilty because he didn't go to work. And I think the CEO of Akamai, ticker AKAM, died as well in one of the airplanes that took off from Boston. I can't remember what it was. Anyway. Okay. All right. So another question here. Can you elaborate further on private equity, as you mentioned with Carl Icahn on PayPal? Yeah. So private equity firms are kind of like hedge funds, but what they do is they raise a lot of money and they invest in companies that are undervalued, right? Which sounds simplistic. Now, hedge funds invest in companies that are undervalued that are only public. Private equity firms are like hedge funds, but they do private stuff as well. So they can take a company that's really, really undervalued, buy every single share, join the board, buy every share, take the company private, okay, kind of like Dell was taken private, turn that company around, make it better, and then take it public again later. They do this all the time, rinse, lather, repeat, right? And there's a guy, Henry Kravis, from KKR, who pioneered this. And Henry Kravis went to my school. He went to Columbia Business School as well. And I remember he came by and he did. If you're curious about learning more about private equity, again, watch that movie OPM, Other People's Money, with Danny DeVito. Great movie. It'll explain how it works in an interesting way. But anyway, so Henry Kravis, who invented the industry, he went to Columbia Business School like I did. And by the way, he was a straight C student. Okay, I don't think grades matter in life at all, right? And so what he did, he came to present to us, and we were like, "Oh, this is going to be awesome." He's going to talk about Barbarians at the Gate, which is a great book you should read. Barbarians at the Gate, on the whole Nabisco private equity deal. Nabisco is a national biscuit company. Okay, but he came and instead of talking about all this cool M&A and breaking up companies, for an hour and a half, he had us captive, and he talked about charity, giving your time. And I think that giving your time is more important than giving your money away to charities. I do both, obviously, big time, but giving your time, right? Mentoring people. Okay. So, so KKR, Henry Kravis, do a search on him on YouTube and watch mini biographies of him. It's fascinating what he's done. And private equity basically means you take a company that's public, you take it private, you turn it around, maybe sell off divisions, restructure, and take that company back public, or two companies public out of it, that sort of thing. Okay, so that's what they do. And similar to hedge funds, they usually charge a 2% annual fee on every dollar you invest in them, and a 20% fee on how much money they make for you. They take 20%, you get to keep 80. And you're not allowed to invest in a hedge fund or a private equity firm unless you're an accredited investor. An accredited investor means the US government, most governments around the world do the same thing. They want to make sure that you make at least $200,000 a year yourself, or $300,000 as a couple, and that you have a liquid net worth, not including your house, of $1 million. And governments make sure that you're not allowed to invest in private equity and hedge fund firms unless you're an accredited investor, because they want to protect you. And governments, I'll criticize governments a lot. I was pissed off with the NSA did and all that stuff, but governments have a noble intention in general, right? They try to protect consumers. And so consumers are protected from hedge funds and private equity firms by the fact that they're not allowed to invest unless they have a certain net worth. Okay. And if any of you are starting a company, and I'm working on this really long course called, it's going to be, I don't know what I'm going to call it yet, but it's something about business plans. Should come out in October and November. If you're going to raise money, please get a lawyer to write up the documents, the offering memorandum. Okay. Please. Otherwise, you could lose everything if something goes wrong. People are really mean when it comes to money. And if you don't ever let your parents invest in your company. Like I remember I let my parents invest in my hedge fund years ago, and it was during Thanksgiving. And I'll never forget, my mom meant it in a nice way. She said, you know, pass the turkey, how's our investment doing? Whatever. It just felt uncomfortable for me. And so I never lied, but I did lie one time to my parents. This is the only time. At the end of that year, I had a good year that year. I said, we have to close our offshore fund and our hedge fund, which means all Canadian investors have to redeem. I'm sorry. And they did that. And that was good because next year I lost a bit of money. Anyway, that's you have to be an accredited investor to invest in these instruments. And I can talk more about private equity if you want, but the bottom line is I love edutainment, meaning entertainment and education. Watch the movie OPM, Other People's Money, with Danny DeVito. That will help you understand private equity. Also, watch the movie Wall Street from 1987, the original one. Gordon Gekko is a scumbag and certainly not a role model. But that will kind of help you understand private equity. He kind of was a hedge fund private equity guy, kind of like there's this great speech he gives where he says, greed is good, greed is right. And he's addressing shareholders in the board of Teldar Paper. Anyway, just watch that movie if you want. And another great movie, and I love learning through movies. And I'm going to make a business documentary one day. And for those of you that watched my vlog from, I think 2 days ago, I talked about visualizing your goal and telling people about your goal so that you have to follow through and do it. Like when I wrote my first book, which wasn't that great, whatever, but I told my parents and my friends I was writing a book. And everyone kept saying, "You're in that. When's that book done? Are you done with your book yet?" But I threw down that challenge. And in that video I showed, I was holding an Oscar, a fake Oscar at the end of that video. I'm a fraud because it's fake. But my goal is one day to make a business documentary and get an Oscar for it, kind of like Kobe did, whatever, for basketball, but for business. But throw down a challenge and tell other people about your goal, and it'll force you to kind of make it happen. And the last thing I'll say about this topic in terms of movies is the best movie that explains what really happened in 2008 is a movie called Too Big to Fail. Too Big to Fail. It was on HBO. Paul Giamatti, who's in that show Billions, plays Ben Bernanke beautifully. James Woods plays the CEO of Lehman Brothers beautifully. Anyway, check it out if you're curious. Okay, great. And if you have more questions on private equity, let me know, please. Okay. Dante, how are you, bud? How's Montreal? How's the weather? Okay. Good morning, Chris. I've recently talked to a hiring manager who told me that her boss asked her to not hire people with foreign names. Oh, that person shouldn't have a job. That person should not have a job. I would tell your friend to report that to the head of human resources because that's racism. That's what I would recommend. That person should not have a job. Okay. That's it. That person should be fired. Okay. That is racism. That is definitely racism. And it's weird because my grandfather, he was Lebanese and his last name was Haddad, and he changed his last name to Haddon because he was in Canada, whatever, and people were racist, more racist then than they are now. And I even remember my dad walking down Yonge Street in the late 60s. My dad is darker skinned, he's Egyptian, and people would pull over my mother and said, "Your father should be ashamed of you. Would be ashamed of you if you knew you were dating this immigrant." And we have to remember that back in 2000, back in the late 60s, it was illegal in 13 states to have interracial marriage, right? And so things were crazy then. People had to change their names to get a job, which is dumb. But that person, Dante, you're talking about, is probably living back in the 60s and should not have a job. And so your friend should report that person to the CEO or the head of HR, because it's unacceptable, unacceptable to be to be racist. In terms of me, like it's getting better, but I've had. I remember after 9/11, I was in Germany. I landed in Frankfurt because I was meeting in a town called Waldorf with the CEO of SAP, right? And I think this was maybe it was '02, I can't remember. But I remember when I went through customs in Germany, they asked me what is the ethnicity of my name, right? And I lost it. I said, screw you, blah, blah, whatever, right? But anyway, and then also, after 9/11, I'll never forget this. I was on the no-fly list because I have an Arabic last name. And people were definitely more racist at that point. It wasn't that bad. Like I always try to look at the bright side of everything, right? Like I was in the no-fly list because my last, whatever, it is what it is. I'm not gonna, but I looked at the positive. And I remember LaGuardia, when I would go to LaGuardia Airport in New York City after 9/11, the lineups were crazy long because obviously they were trying to be more careful about if people are smuggling guns and stuff on a plane. But I would always approach the security officer, and because I was on the no-fly list, they always walked me to the front of the line and gave me extra security, pat down, whatever. And then I got to just kind of hang out and have a beer in the American Airlines lounge. I was a baller, just kind of chilling out. I felt important, but anyway, I saw the positive in that. Anyway, sorry for rambling there, Dante, but I hope that answers your question that person should not have a job. Okay. Okay. Got a question saying sometimes it's hard to believe in yourself. How do you get over your fear in general? Okay. So I've talked about this before. I'm going to go really quickly. Okay. So I'm going to show you a chart. Ignore what's on this. Okay. So on the x-axis, and this is good to hear again. Okay. On the x-axis is your age. On the y-axis is give a darn. Give a darn. Okay. Age, give a darn. When you're younger, like my kids, you're down here. You don't give a damn what people think of you. You'll have meltdowns in restaurants. You just won't care. You don't care. And then when you're really old, you also don't give a damn. Old people don't have confidence problems. Okay. They don't care what people think. It's kind of cool. And then when you're 20, in your 20s, like I was, you give a damn. I was insecure. I was very insecure in my 20s. You care what people think of you. And it's disastrous because it holds you back. It holds you back on focusing on your goals and enjoying life. Most people that worry about stuff never comes true. Now, visualize this. That's a triangle of despair. I want you to avoid that triangle and live on this level here. And I don't want you to give a shit what anybody thinks. Sorry for swearing. I don't do that often, but I want to get that point across, okay? I don't want you to give a damn what anybody thinks of you. And the most successful entrepreneurs and business people in the world, they live at this level. They've never gone up to this insecure level. They don't care. And that's why they're successful. They don't care because the second you care about what other people think of you, you'll always be their prisoner. And so all great entrepreneurs live on this level. They don't care what people think about them. They don't care if they fail. They just keep trying over and over and over again. And there were some negative repercussions to it as well. Like Steve Jobs, he didn't care, right? He actually had to, when he was at Activision or Atari before Apple, they made him work the night shift because he had long hair, he smelled, he didn't shower. I don't recommend not showering. He didn't care. And so I want you to live on this level, please. Don't care what people think. Obviously be respectful, but just don't care. Don't care. I don't care. I didn't care to wear a collared shirt today. Okay. All right. So hopefully I answered your question. Again, if it did not, please let me know. If you have questions, please type them here. How are we doing on time? Okay. So we're approaching the 2.5 hour mark. I'm exhausted, but I'm going to stay here forever until I answer every question. Okay. So I'm not going to end this. We're going to keep going. Okay. Okay. Give me a second. Let me scroll down here. Starting to get my second wind here, even though I'm exhausted. Okay, Max. Hey, Max. I need orientation. I want to have financial independence. I have a monthly income, free time, and 24 years. Love it. I don't know if I should start a business, invest in a stock exchange, or something else. Okay, great. So I recommend, I hate pitching my courses, but I have to mention this because I really believe in it. I made this course called the Complete Personal Finance Course. It's 3 courses in one. I'm a used car salesman now. It's 3 courses in one. It'll help you save, protect, and make more money. Okay. Check out that course. It'll tell you exactly what to do. I will never tell anybody what stocks to buy, but I will help you. I provide you the framework that'll help you know how to pick stocks that win. Okay. And I've done well over the years investing, and I've learned a lot. I failed a lot and I've been successful a lot as well. Okay. So take that course. It will help you out a lot. Little things are important, like your retirement savings program. Every country is different, but all countries have them. In the United States, it's called a 401k, right? And in Canada, it's called an RRSP. Not an RSVP, RRSP. And basically what means is governments will give you a certain amount of money every year that you're allowed to save without paying taxes on it. And you'd be crazy, I humbly say, not to take advantage of that every single year. And you never pay taxes on it. It just grows and grows and grows and grows. You don't pay profit taxes. You don't pay taxes until one day you start taking that money out. Years from now. Years from now. So in that course, I explain, Max, how to take advantage of those tax savings programs. And there's so many tax programs you have. And for those of you that have kids, please talk to an accountant or a tax lawyer. It might cost a couple $100 an hour, but I promise you it's worth it in the long run. Because there are retirement savings programs that allow you to take, like my kids, I've already paid for their college. So I don't like to talk that way, but all their colleges are paid for because we put it in 3 different retirement accounts for them. Okay. Anyway, check out my course. You'll see. And just living cheaply is the way to be. So if you and your wife or you and your husband go to Starbucks every day, okay, and you spend $4 or $5 together on drinks, Starbucks. If you decide not to do that and just put that money in the bank at like an 8 or 9% savings rate, that will be more than $1 million by the time you retire, right, Max? More than $1 million. Okay, it's the time value of money. And I try to explain to my kids as well, instead of spending money on V-Bucks, it used to be gems and Clash of Clans. I try to explain, look, dude, if you save that money today, it'll be worth way more in the future. But they want instant gratification. So anyway, that's my course, the Complete Personal Finance course. I had a lot of fun putting it together. But anyway, that will help you understand how to save more money. Okay. Okay. All right, next question. Okay, when you invest in a stock, how do you determine the criteria for selection? Number 1, management team. They have a great management team, then do more research. If not, don't do any more research. I'd rather invest in a B company with an A management team than vice versa. Number 2, look at the business model. Look to see if there's any barriers to entry. Okay. Yeah, and then just go to harounventures.com/template, download that template, and fill in that 1-pager. Okay, that'll help you out a lot. So right now, we've been talking for about 2.5 hours. I'm going to take a 2-minute break. Okay, so if you're with me here, I'll be back in 2 minutes. I'll write it here, and I will be back in 2 minutes. All right. All right, so I'll be back in 2 minutes. Okay, I gotta refill my water and stuff here. Thanks. Hey, thanks for waiting. Appreciate it. So, did you guys see this thing, by the way? All right. So, anybody know what this is from? This is from, and somebody asked me about how I approach an investment. Let's talk about this first, okay? This here, and I put this in my complete cryptocurrency course. There was a company in 1999 that raised a lot of money that went public called pets.com. And this here, I got all my props from eBay. This here is their mascot, right? And this was the poster child for the bubble. Okay, the bubble was in 2000, or yeah, the 2000 bubble burst, internet bubble. This company went public, had an awful business model. All they sold was pet stuff, like pet food online. And then smart investors were thinking 5 years out, they were thinking, well, can't just Amazon sell pet food and stuff online? And a lot of hedge funds shorted pets.com, which went bankrupt. And a lot of hedge funds made a lot of money, but that's the 5-year test. Will this company be more relevant or less relevant than it is right now? Okay. So, ow, damn it. Seriously? This is pets.com. Actually, I'm going to use this for the graphic for this call. Okay. So hold on. Let me do this here. So, and I always have to pick one screen. That will be the graphic I'll use for this. Okay. Okay, I'm going to put you away now, okay? All right. My kid's supposed to have this. I told him he can get it after the call's done. Okay, pets.com. So that was the poster child of the last bubble. All right. Hi, I'm 7. All right. Actually, I'm 7.5. All right, next one we got here. Okay, let me just scroll down. Looks like you got a bunch more questions. Yeah, if you have questions, please let me know. Although I didn't get much sleep last night, I'm going to do this all day long because it's fun and you're the customer and I love what I do. Okay. All right, hold on. How do you determine if a stock is a multi-bagger? And for those watching, multi-bagger, I guess means you think a stock's going to go up many, many times over and over again. And don't ever invest in a stock because you see 10 or 15% upside, because you'll never, if you can time a stock within 10 or 15%, that's pretty damn good. I tend to, when I worked at another venture capital firm, we would only invest in companies that we thought were a 5x5. And Andreessen Horowitz does this too, big VC firm. And 5x5 means look for a 500% return within 5 years. Okay. Starting to get my second win here. Starting to feel better. Okay, good. We can go forever here. That's what a multi-bagger is. So to determine whether it's a multi-bagger, just build a financial model. And my courses, whatever, teach you how to do that. And then just come up with a target price. That's the best way. All right, Dante, another question here. Currently, I have 2 jobs while trying to run my own business on the side. I felt exhausted sometimes, and should I focus just on one thing instead? Thank you so much. Well, it's a great question, Dante. So you got to take one day off a week. Otherwise, you'll burn out. And I burned out many times in my career, and I don't learn from my mistakes, right? But even our forefathers and foremothers, whatever, thousands of years ago, one day off a week, you were not allowed to work, Sabbath or whatever it's called. I don't know. And they knew back then that you could burn out if you overdo it, and you got to take your breaks. And I have a daily schedule, and you can access it from harounventures.com/schedule, all lowercase. And what I do is when I write out what I'm going to do the next day, everything, I put in time for exercise, rest, family, God, etc. Everyone's different. Okay. But I find that if you want something to get done, you give it to a busy person, right? And you know what I'm talking about, right? When you were unemployed, or I was unemployed years ago, whatever, you tend to not get stuff done when you got nothing to do, right? So I find that the busier you are, the more stuff you get done. Just schedule it one day out, Dante. And also please make sure that you schedule time for family, friends, exercise. Family, friends, exercise, FFE. There we go. Yeah, that's what I would say. And in terms of if you had a choice, Dante, what to focus on, which job, if you had to pick between the two, I would pick the one that's you enjoy the most. Okay. The one you enjoy the most. The one that when you get out of bed in the morning, it doesn't feel like you're going to work. And for all those of you that get up in the morning and tell yourself you have a job, with all due respect, you're doing it wrong. And I've done it wrong most of my life. I want you to get up in the morning and tell yourself, I'm going to my passion. I love what I'm doing. So Dante, the bottom line there is, out of those two jobs, pick the one that you enjoy most. Okay. Anyway, it's like my little sister. She always used to say, Chris, that's peace. That's your half. I'm not going to show that. Okay. All right. Okay. Last question. Sorry. Another Dante, never be sorry about, and don't say sorry. Last question, dude. You ask great questions. LinkedIn everywhere. Just keep them coming. I'm here to help. Okay. That's why I'm here. Thank you. Okay. All right. Do you think the price increase of Apple devices will harm their future benefits? I think the market's going to be bifurcated longer term. I think that the more expensive high-end consumers will buy Apple, and then the more cost-conscious consumers will buy Google-based Android handsets. That's what I think. But if your brand is so powerful that you can charge high fees and have high margins, then I say go for it, and investors will probably love it. They'll love it, right? It's like the fashion industry, which is a really tough industry, but if you get a great brand like Gucci, whatever, you can charge that premium. And Apple's kind of getting into the fashion business. You'll notice you walk into an Apple store, you'll see the watches, right? The Apple Watch. And they made a bigger one. I might actually get it now because my eyes are bad and I can read. But you'll see that they have Hermes bands and all that stuff, right? And so when I think of Apple longer term, they're going to move into higher margin products too. Okay, like higher end watch bands, that sort of thing. And why can't a computer look like a nice piece of furniture in your house? That sort of thing. Whatever. I won't go there, but I think it's always a good thing when prices are rising. And when I used to invest in cyclical companies and commodities, the most important thing when you invest in a commodity company, oil company or whatever, or Petrobras, offshore drilling in Brazil, et cetera, or CVRD or whatever, Exxon, ticker XOM, the most important thing is that the price is going to go up of that commodity. Every sector's got a driver. And the biggest driver to make energy stocks go up is the price of oil and earnings too. I get it, right? So that's the driver. Every sector's got a driver. Every single sector. In the retail sector, and I did a vlog on the retail sector and valuing Chipotle. So just do a search if you want to watch it. It's all free, whatever. But I did a vlog on that, and I explained how in the retail sector, when you invest, you value stuff on what's called SSS, which means same store sales. And the reason you do that is investors in McDonald's, for example, should not give McDonald's credit for opening a lot of stores, because they open a lot of stores, new stores. It looks like revenue is going up a lot, right? No, you look at the growth in revenue per store, same store sales. And that's why McDonald's, started offering coffee, so same store sales would grow. Then they extended breakfast all day long. Thank God, no more meltdowns for my kids at 11:01 a.m. And then they started doing other things as well, like being open 24 hours a day, which is good for people that consume certain illegal stuff, whatever. Actually, it's not legal anymore here in California. So anyway, look at same source. And every sector is different, right? Every sector has one driver, right? And ignore everything else initially, one driver. So with commodities and machinery companies that are based on commodities, it's the price of oil or the price of silver if they're mining silver, et cetera. So that's just how it works. For the hotel industry, it's RevPAR, which is revenue per available room. Okay, so you look at the growth year over year organically of each unit. Okay, and for cell phone companies, it's ARPU, average revenue per unit per cell phone. How much more money is AT&T or Verizon, whatever, making every year off of that one handset? Okay, great. Okay, let's go next. Brandon's got a question. Let me scroll down so I can read it. Sorry. So hard to scroll in this thing. Okay. On your last vlog, your 10-year goal is to win an Oscar, win an Oscar on business documentaries. I'm a fraud, by the way, because as you know, that was a fake. It was a fake. Okay, that Oscar I was holding. Okay. But by putting myself on the line and telling you my 10-year goal, I kind of have to work towards it now. Otherwise, it's embarrassing if I don't make it. But I will make it. Okay. So Brandon says, on your last vlog, your 10-year goal is to win an Oscar for a business documentary. Ever thought about making your film documentary on the relationship between long-term business success and business? I mean, that's actually not a bad idea. Usually documentaries that do well are the really controversial ones, right? Where people kind of think, oh, I want a Pulitzer Prize or whatever it is. But I think I'll throw in something like that. I'm not sure what the topic's going to be yet. So if anybody has ideas, just send them to me. And you all inspire me so much. Okay. So I love doing this call with you because I can see real-time feedback. I can see the number of people watching right now. And whenever I say something that's not impactful, the number goes down really quickly. So anyway, and that 2-minute break I took, by the way, that was probably the most value-added part of this call. All right. So next question we've got here is from Brandon as well. Hey, Brandon. Yes, great questions, man. Ethics. The business investment success of Warren Buffett, Goldman Sachs versus the demise of Enron, Madoff, Lehman Brothers, and Arthur Andersen. Okay, great. So you want me to talk about ethics, right? You got ethical people like Warren Buffett, Goldman Sachs, whatever, all that stuff. And you've got unethical, right? Enron, Arthur Andersen, Lehman Brothers, Madoff. And Bernard Madoff, as I mentioned earlier, was that guy that scammed many people out of their money, including John Malkovich, the actor. That's why he's on the show Billions as the bad guy, by the way. A little bit of trivia for you there. He lost a lot of his net worth to Madoff, Bernie Madoff. It was tragic. And in hindsight, we should have known. I mean, his name was Made Off. Sorry, dad humor. Bad. I think corporate cultures all determine whether or not you're going to be ethical or not. And it's hard to kind of hire only people that are going to be very ethical. I found when I worked at Goldman and I went through the training program, the first day they said, welcome. And then they said, don't do anything that's going to get this firm on the cover of the Wall Street Journal. And you probably have more of a chance of doing bad stuff for this company than good. And then they fingerprinted us, pat us on the back and said, welcome to the firm, right? No, they did it in the right way. And at Goldman, they always talk about this notion of being long-term greedy, long-term focused. And that will kind of stop you from cutting corners, right? People cut corners to try to make money. And my dad gave me great advice when I was a kid. He said, Chris, don't ever take a shortcut you've never taken before when you're in a hurry. You know what I'm talking about. When you're driving your car, you know what I mean? You're late. So you take a shortcut you've never taken before. It takes you longer to get there, right? And the same thing with money. People try to, like at the end of the year, mutual fund managers try to chase performance, right? And they know they're going to get fired because they're down for the year. They don't give a damn. They just chase performance, right? And they just put it all on black or whatever it is on one big investment. So anyway, but once a cheater, always a cheater. Okay, so like if you know somebody that cheats on their wife, well, you can't trust them. They cheat on their spouse, they're probably going to cheat in business. And also when it comes to ethics, I think you got to go with your gut as well. And you know what I mean, because there's probably a time in your life where you talk to somebody and your gut told you that you don't trust this person. You couldn't really say why, but you didn't trust them. And then they screwed you over. And there's a great saying, which is, fool me once, shame on you. Fool me twice, shame on me. Right? Go with your gut always. And it's tough to explain, but you know what I mean. Go with your gut. Okay. All right. And that goes for also when you're interviewing at companies to get a job. I want you to interview them as well. Right? You're going to get multiple job offers, especially. Okay, I am going to pitch a course, okay, because I really believe in it. There's a course called the complete job course that I created. I'm so convinced that you'll get a job from it that I'm offering you, everyone sorry, I sound like a used car salesman again, but I'm offering you a lifetime guarantee. Okay, anybody that I see on this call, a lifetime guarantee on that course, because when you're interviewing other firms, I want you to interview them as well. I want you to have multiple offers to the extent that you take the offer from the person or firm that feels the most ethical to you. Okay. Anyway, a long-winded answer for going with your gut. Okay. God, I talk a lot. Okay, where's my water? Okay. Oh, when I was getting this thing, I got water. I'll be right back. Okay. Don't go anywhere. All right. My right hand's cold. Okay. All right. So let's see here. All right. Question on short selling. And if you have any questions for the pet here, just let him know. He's kind of eager to help out. Ow! Okay. Okay. Question on short selling and put options. Okay. So it's a point you're making. Good. So short selling and put options are essentially bearish strategies used to speculate a potential decline in a security or index or to hedge downside risk in a portfolio or specific stock. You're correct. That's right. And what I used to do is I managed a $1 billion software portfolio years ago. That was me showing off. No, I'm just kidding. But I did. And because it was a hedge fund, I had to have a lot of shorts and longs. And so what I did was this. I would always have, when the market was doing really well, I would buy really, really high growth, expensive speculative companies at the time, like Salesforce.com, ticker CRM. And on the other side, I had to have shorts. I was only allowed to be 30% net long or net short. And at one point in my career, I could only be 10% long net short. On the short side, I'd always have a massive short in Microsoft or SAP or Oracle, the three big uglies, right? The three big companies, sorry. Because I know that if these things would never triple in value, but these ones could. Salesforce has been a 10 bagger. So anyway, a little bit about risk management. Okay, Margaret, I just want to say thank you for sharing your 9/11 story with us. Thank you. And I'll talk about anything. I'll open up and talk about everything. Thank you. Okay, just another Joe. Hey, Chris, I'm very late to the party today. Oh, no problem. And if you're just joining us, don't worry. Ask any question. Okay, even if I've already answered it, I'll just ask anything you want. And I'm staying as long as you want. I was really exhausted when we started this call, as Christine's away in Greece at a wedding, and I'm watching three boys. But I don't have to pick them up from school for many hours from now. And I've got my second wing. So let's go. Let's keep doing this. Okay. So Dan is basically saying the movie The Big Short is a good one too. Yes. And Front Point, it was based on Front Point in that office. I went there and tried to raise money from them as well. A little off topic. Yeah. But by the way, remember the drummer in that movie, played by Christian Bale, who was also the kid, by the way, in Empire of the Sun. A little trivia for you there. Great movie that did awful that Spielberg made, which has an awesome soundtrack. But the reason I want to talk about Christian Bale and his character from that movie is because the best investors on the planet, and I've worked for many billionaires, the best investors I've ever worked for and known are ones that are very unemotional about stocks. They're unemotional, right? It's almost like they have borderline, some of them, I won't name which, but some of them have borderline Asperger syndrome. And the reason that they do really well is because they don't get too happy when things go well, but they also don't freak out and get upset when things go poorly. And I remember one day, my boss at one company, love this guy. I can't name him, sorry, but the market was crashing. I went into his office and I was like, dude, have you seen our portfolio? We're getting cream today. And it was August, right? August of 2007 was a month when the big tech trading firms like the Goldman Alpha Fund and Renaissance were reversing their portfolios. So stocks with good fundamentals went down and vice versa. But I went to his office, August 2007. And I said, dude, you seen our portfolio getting killed? And he said, Chris, I just found this wrapping paper on sale. And so I'm wrapping all my kids' Christmas presents right now. True story. He's probably one of the best investors I've ever worked for. This guy, actually, I'm going to tell you his name. Okay. He was great. And he's not the one with Asperger's or somebody else, but his name was Carson Levit. And he recruited me to work here at Citadel and Pequot out here on the West Coast. Great guy and one of my mentors. And he made $1 billion in one stock in 1 month. The year was 1999. In the summer of 1999, George Soros hired him. And George Soros' fund was down 15% that year in 1999. Carson Levit got the fund, the firm, George Soros' firm, back to break even by December 1st, 1999. And then he made $1 billion in one stock in 1 month in December 1999. You can look it up. And that stock was Qualcomm, ticker QCOM. And I remember asking Carson, I was like, Carson, how did you know? And he basically said, well, I noticed more and more people walking down Fifth Avenue with cell phones, and I asked myself, what's in these things, right? And he kept it really simple. He's very self-deprecating, great guy, but just keep it simple. Keep it simple when you invest, okay? Anyway, so that's my Carson Levit story. Great guy, great guy. Okay. Another movie you're mentioning, you're highlighting here, The Wolf of Wall Street is good to watch as well. That's awesome. And there's the guy that played the FBI agent in that movie is my favorite. He was on Friday Night Lights, which is an awesome TV series. If you haven't watched it, watch it, please. It's about football in Texas. Fantastic. Anyway, no, that was a good movie. And that's actually a true story. I mean, they exaggerate things a little bit, but it's true. Gordon Belfont or whatever his name was. Yeah. Yeah. It's so interesting how, I don't know if you've noticed, but Hollywood always makes the rich dude appear mean. Every single movie, the rich person is mean. Okay. It's, of course, that guy was a criminal in The Wolf of Wall Street. He did a lot of bad stuff, but it's interesting to note Hollywood always makes the rich dude look mean. Okay. Off topic. Sorry. Okay. Oh, you're welcome. Thanks from Holland. Okay. Oh, you will. Thank you. And if I mispronounce anyone's name, I'm so sorry. Love you, Chris. I took the MBA 1 course and I learned a lot. It was great to learn about the history of venture capital as well. And then you started typing a question. Hold on a second. It skips down here. I'll answer your question and I'll come back to you in a second. Do you know about Tobin's Q&A ratio to evaluate stocks? Sorry, I don't. I don't know what that means. If you want, you can type it in. Is it similar to price earnings, price to revenue, cash flow, etc.? Just let me know, please. Okay. Thank you, by the way, for that compliment. I appreciate it. I'm humbled. Okay. All right. From Chris, how do I skip the passion trap to identify the realistic challenges? I have a startup idea. I'm extremely passionate that it is hard for me to identify challenges that I'll be facing. Okay. So you're starting a company and you don't know what the risks are or challenges are going to be. I'll tell you how to do it. So what you do is this. Find a company that's similar to your company, that's big and publicly traded. Go to sec.gov and do a search on 10K or the S1 filing. S1 is when they went public. And read about the risks in here for that company, because the risks for this company similar to yours are the risks for your company as well. Okay. And if that did not answer your question, please let me know. Thanks. Okay. Oh, and by the way, when you meet with a company and you're considering investing, ask them what are the weaknesses of their competitors, because boy, will they talk a lot, right? And it helps you learn about that competitor that you might be thinking about investing in as well. Okay. And also, whenever you meet, I always have a bunch of questions I asked. My favorite question is always this, which is, what is the most misunderstood aspect of your business model by investors? I love that question. Okay. So anyway, and there's a lawnmower outside. If you can't hear me because of it, let me know, please. Otherwise, we'll just go on. Okay. Hello from Poland. Hey, man, how are you? I like your emoji there. Thanks. Okay. How do you do an analysis for new products? Okay. So that's a great question, and I know where you're coming from. So how do you analyze a company in a market that doesn't exist? Okay. Well, that market does exist. It's only because it's going to take share away from another sector. And I'll give you an example. So when Google first went public, people are like, well, I don't know how to value the company. I mean, they're doing stuff that I don't know how to value it. The way to look at it is to look at the advertising market, right? Like Lamar, LAMR is the ticker, which is one of my best shorts, 2008. Look at the advertising industry, okay? And just look at their end markets. And that's the end market that Google took share from, okay? So a new school company, Google, took share from an old school company, Lamar Advertising, for example, and others. That's how I'd approach it. Oh, thanks, Brandon. You should rest and recharge for your next vlog. Thank you. I appreciate it. Oh, shit, that's right. I'm sorry. I have to do the vlog today, too. I kind of cheated yesterday. Last night's vlog, I was helping the kids with dinner and their homework and stuff. So I feel bad about this, but I reused a vlog from a couple of years ago. I actually threw up a speech. Like I gave the graduation keynote at San Francisco State University, and I published it to my vlog last night. Watch it if you get a chance. It's all my humble advice, whatever. Okay. So let me see. I actually don't see any more questions. Okay. How are we doing on time? All right. So we've reached almost the 3-hour mark. I'm going to give you all 10 seconds to enter in any questions you have. And if you don't have questions, we're going to wrap it up now. Okay. All right. So looks like there's no new questions. So I want to thank you all for your time today. Okay, this was a lot of fun. Sorry about being tired. Didn't get much sleep. I will be less tired next time, I promise. And what you'll find is in a couple hours, what we'll do. Oh, you're welcome, Margaret. You're all welcome. Thank you. What I'll do is in a couple hours later on today, if you go to the description field for this call, you'll be able to click on the times to go directly to any specific question that I answered. And you'll also see links to downloads, whatever, if I mention links as well. And if you want, look at my 3 previous weeks webcasts and just look through the description field and you'll see links directly to certain time slots. Anyway, so that's it. I want to thank you very much for your time. If this was helpful, and only if this was helpful, please click the like button and subscribe to my channel if you want. And I will see you all next week. God bless and thank you.